Welcome, everybody. We are back. Welcome to the stream. We'll cover a bunch of random stuff in this stream. Hope you guys enjoy. But yeah, I don't know. Maybe I'll stream for FOMC. Maybe I won't. Maybe we'll see. I don't know. Maybe if we have more than 1.5 people in the stream, then I'll continue the stream. But probably not gonna happen. Too new on this channel. But anyways, so right now with Bitcoin, we hit the weekly resistance long target. It was a long target. If you guys watch a lot of the YouTube shorts on our channel, you guys will know we had discussed looking for a long target pretty much to here and then up to there. So we just hit that final long target. Whenever you reach your long target, you usually have some resistance, either from profit take or from short sellers or sellers just entering the market at said level. So right now the sell target's down to here. You can actually see it's jumbled in there, current sell target. So that current sell target is the target from the sell at weekly resistance, right? So if you think about it like this, where market has gone up to long target, you could have, I didn't, but you could have entered short. That was a trade, right? Entering short at said resistance. Then looking to take the market all the way to the current sell target from that resistance. So ultimately, you have a trade here with whatever this is. What is Bitcoin short position? So if you had entered at said resistance and recommended resistance, and then you try to take it all the way down to the current sell target, you have a profit potential of, well, $1,670 per coin, right? Now, I mean, if you go for 1,600 to make it a 1 to 2, you would have had to risk up to, I don't know, let's see. To make it a 1 to 2 trade, you would have had to risk all the way up to, I don't know, what is that? 118,400. If you had taken the trade at the weekly resistance as suggested, then you only experienced no risk. Literally, if you had entered on the first tag of weekly VWAP resistance, targeting down to the current sell target, you've experienced zero risk from the entry of the trade. Now, if you had been going, this thing's getting a little goofy. Hold on. I'm going to have to delete this one, add a new one. Now, if you had gone for, like we said before, a 1 to 2, your risk would be, all the way up there or something like that, right? So that'd be going for more of a 1 to 2, if you will. Actually, it's a little less. So this would be a 1 to 2. So initially, you could have been going for a 1 to 2, but hindsight 2020, after the entry, you experience zero risk, making your trade a 0 to 82 risk reward. Well, so far. Well, no, that's what it'd be if it completed. Right now, with the entry at weekly sell resistance, you would be at a 0 to 27 reward, which is, I guess, not even really a thing, but that's what you experienced via that trade idea. Again, you would have maybe set up for a 1 to 2, maybe a 1 to 1.5, who knows, a 1 to, I don't care, whatever you would have done, but ultimately you experience zero risk from entry of that trade. You know what I'm saying, dude? So that's lit. All right, let's go over the market. Here's a bunch of random stuff on this chart from earlier in our private session. Pretty much just telling people how the market was going to trade. Yeah, essentially today's target to start the day was down to that 50 SMA. So pretty much all the morning analysis and everything we do in private streams pretty much suggested to traders that we would be looking downwards on the market to about 6:59 to start the morning prior to FOMC. Afterwards, we would see what happens. But yeah, ultimately today's sell target on the market was down to here. So we can review that. There's really not a whole lot to say. I mean, it's pretty straightforward when you do this stuff every single day and you run forecast and analysis for the market, it becomes very repeatable in the sense that you don't really have to strategy hop or anything like that. It all just kind of comes into one, right? So as we had mentioned, this yellow line here was and is the 50 SMA current day sell target. Doesn't mean the market won't go down further. Doesn't mean the market can't go higher. It just means that when we woke up this morning and analyzed the market, prior to FOMC, we saw the market would likely target here. All right. What do you notice once the sell target is met? I know I'm speaking to nobody, but in the off chance that YouTube actually stops being so cool, maybe someone will enter the stream. But anyways, so like we were saying before, when you meet or complete your sell target, so that would be sell target completing to the 50 SMA, you can see the market tries to bounce. Though it's not a great bounce, and though it attempts, that's another thing. It's just bottom line, when you pick correct long targets or sell targets, like I'm showing, you generally have the opposite reaction once the level is met. And the reason being is everyone that's selling the market down to this target ends up covering their short, which ultimately adds a little bit of buying pressure back to the market. All right. So, yeah, pretty cool stuff. Pretty straightforward. All right. As far as FOMC goes, FOMC is pretty much... Oh yeah, I forgot to mention, the market is purposely positioning itself here today. Whether or not at the FOMC announcement we're trading right around here, or whether it's higher or whether it's lower, is pretty much irrelevant, doesn't really matter. All that actually matters is that FOMC comes out and the start of either the new sell signal is going to start from here, or the start of the new buy signal will start from here, right? So what I mean is, whether FOMC comes out and leading into it, the market bounces up, or the market does this, it doesn't matter. The long or the short always starts from here, all right? So what happens is during FOMC or leading into FOMC, what the market likes to do is it likes to bring the price of the stock market back to the 50 SMA. So as you can see here, sell moves happen below, down. Buy moves happen above, long up. Sell moves happen below. So what you're seeing is the market just came from a fantastic buy algorithm or buying operation or systemically planned buying program in the market. That's how it works. We are now starting to shift the market below the 50 SMA. All right, so you can see, here we go. Ready? Market's starting to shift below the 50 SMA. When we come into FOMC, the market almost always does that. No matter if the market was in a sell move or if it was in a buy move, the controllers of the market will bring the price of the stock market back to the 50 SMA. You may be asking, why would they do that? Actually, nobody's asking why they would do that because there's no one actually in this stream, but that's okay. So the reason that nobody is asking why they bring the market back to the 50 SMA is because, again, the 50 SMA is going to dictate a long move or a buy program or a selling program. So let's just look at this past couple months, right, in the market. Ready? Right? So below, sell program. Above, buy program. Below, sell program. Above, buy program. Below, sell program. Above, buy program. Since we're below, do we enter a sell program? We're about to find out. And what are they going to use as the catalyst to shift the market into a sell program, or to shift the market back into a buy program and continue a buy program? They're going to use FOMC. Now, if the market just straight up tanks, right? So if the market just straight tanks for FOMC, right, guess what's going to happen, right? So let's say the market just goes, blah, right, all the way down, which is probably not. But if it does, what's going to happen? You're going to see every single YouTuber, not myself, but every other YouTuber, along with every other news station, along with every other article in the stock market saying, the market tanked because FOMC, Jay Powell cut rates, blah, 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 whatever, whatever, right? But the reality is they just used FOMC as the catalyst to trigger the new sell operation. So yes, it's important in the sense that FOMC is what's going to drive the next move in the market, but the people that control the market are purposely setting the market up. It's called a setup. Literally, like the FBI would set up someone or the cops would set someone up to get them in trouble. It's the same thing here. The market is currently setting up the next trade, which is either a continuation of the buy program or a new program, which would be a sell program. And that buy or sell program happens, again, at the 50 SMA, which is where we're currently priced, right? So, wait one second, let me delete this bullshit off. There we go. Let me delete this to remove all eight. All right, so again, FOMC afterwards, if the market tanks, every YouTuber, news program, every article on the internet, whatever, they go, oh, FOMC was bad, the market tanked. Yes, arguably true, but what's behind the curtains is that the market is right now at what we call the over-under. It's at the 50-yard marker of the football field, right? And FOMC is basically what we're going to use to either kickstart a new sell program or enter a buy program, right? And those that just think the market's moving because of FOMC, essentially, I mean, it's right, but it's wrong, right? What we're doing is we're setting the market up at the 50 SMA, and we're going to see how FOMC whatever comes out. And if the programs of the market want to break the market down, they're going to do it. And if the programs of the market want to keep the market going into a long, they're going to do it. Do I know which way it's going to be? Absolutely not. I'm just going to follow after it's all said and done. And the level that the computers and the algorithms of the stock market that drive prices higher or lower, they're going to essentially dictate that move off the price of, in this case on SPX, it's 6,602. If we're looking at the SPY, it's like $659.29. All right. So I'll show you real quick where we're at right there. Bing, bang, boom. For the one viewer, thank you to whoever you are if you're still watching. I don't even know if you're still watching, but if you are actually watching, why don't you say hello? Because you're the only one here, and I'm lonely. And you get the opportunity to ask any question you essentially want. And you're the only one I can respond to. So that's lit. Yeah, so anyways, today for the one person watching, this yellow line you see there, that was today's sell target. In the sense that that's all we could comfortably predict to start the early morning was a move down to here, right? So this it all ties together. Ready? So we know that what the 50 SMA is the over-under, and the controllers of the market, we'll just call it the thems or the theys, will use the 50 SMA as the dictating, well, as the price point for a new buy or sell program. All right. So since we know that the 50 SMA is the level that dictates new buy or new sell programs, then it would make sense that when we're going to have FOMC, we bring the price of the market back down to the starting point. We're at the starting point. This is the starting point. All right? So we're at the starting point to trigger new swing or new macro trends in the market. And we're going to use FOMC as the catalyst or is the psychological catalyst to trick or convince retail and the public. Okay? This level I'm pointing to is and always will be the level that we're focusing on. In any news, data, catalyst is just a way for us to move the market above or below, up or down, and for retail to believe that's the reason why we move the market, the reason the market's moving the way it's moving. Hello, TZ. Hello, brother. Thank you for tuning in. Thanks for being the first person to watch the stream live. Yeah, I mean, I wish I could say it. I don't know how to say it any differently. I mean, that's just the reality of it. I don't know how long you've been tuning in, but I'll just take TZ. Let's go, brother. Where you watch this? So yeah, I mean, if you're gonna watch this stream, you can watch a bajillion others. But I hope little of the things you learn in here are gonna help you. I've traded for many years with many great wins and many years of wins and many years of tremendous loss. So I've learned a bunch. Not the best trader in the world by any means, not the best investor in the world. Just learned a bunch of stuff over the years that makes sense, and pretty much just hoping to share some of that to some people that will listen, and hopefully it helps. All right, so pretty much what I was getting at, right, is the 50 SMA. It's the over-under. It controls the buy and sell programs. It's more of like a swing to macro trend system, if you will, but it's straightforward, right? So when the market's below, you're neutral. Your bias is neutral or bearish, but not long. When you get above, your bias is pretty much long, not short, right? Or neutral. When below, neutral to bearish. When above, long. When below, neutral to bearish. When above, long. All right? Where are we at today? We are, well, we're right on the level. That's crazy. Why would we be putting the price of the stock market on the specific level that dictates whether the market is going to go neutral to bearish or start a new buy program? Why? Because today is a day where FOMC is happening, where the people that manipulate the economy via interest rates are going to decide whether to cut or raise rates. So they're going to decide whether to cut or raise rates. That could cause a tremendous pull on the market or tremendous continuation on the market. Hence, let's bring the market back to the starting point of where the market will flip bearish or continue bullish, right? So this is something you will see almost every single FOMC is the market will trade back to the 50 SMA so that it can put itself at the dictating point that we're either going to send the market into a sell move, and then later this afternoon, after the market crashes, we'll pump a bunch of articles on the internet that go, oh my gosh, the Feds didn't cut rates, or they did cut rates, and the market didn't like it, so the market dropped. And then retail's going to go, oh my gosh, Jerome Powell screwed us all over and screwed the market up. When in reality, it's just we're using that catalyst on the new breakdown to sell the market. That's it. So it just so happens that FOMC is perfectly timed where we could potentially break the market down, right? And this sort of pattern will repeat endlessly until the end of time, all right? So again, if you go back, we can go back so long. I mean, it's always there. It's never going to change, ready? I mean, sometimes they're cleaner. Sometimes they can be a little meh. But the bottom line is the market's never perfect. Nothing's ever perfect. But this thing will keep you on this system will keep you on the right side of the trend of the market pretty much every single day of your life. All right. I mean, we can go back for as long as you want. It doesn't matter. It's always the same. Ready? Above, you're bullish. When it starts to break down, you're neutral or bearish. If it breaks above, you can try to trade long. If we start to get, this is like chop, sure, but below, neutral or bearish. Above, long. Below, neutral, bearish, right? So you use that, right? So let's see. Ready? Watch this. So look at this day. You're long, and then all of a sudden the next day you see it start to break down. You go, know what? I'm going to take my longs off. I'm not even going to trade bearish. I'm just going to pause. I'll be neutral until I see the next buy operation. What happens? Well, the entire market tanks, and everyone on the internet's going, oh my gosh, it was Jerome Powell, or maybe it was CPI was so hot or whatever, and that's why it's going down. No, the market just entered negative trend, so me and you, now that you've watched the stream, we're just going to Hands off. We're just chilling. We're just not going to go long. We're just going to wait until the next buy signal. Where's the next buy signal? Oh, there's the next buy signal. When? When the market recovers the SMA. So we go from neutral, bearish. This is an oversold reversal bounce in a bearish downtrend. This is where the trend flips positive. So now we're back long. So you enter back long there where I'm just moving the chart. Ready? So that long lasts like 3 days. And then guess what happens? 3 days later, the market goes to neutral, negative. Ready? Not to mention, let's just say, for example, that you got long on this new buy operation right here over the 50 SMA. So you're long, new buy operation right there over 50 SMA, right? And then you go, I'll stop out if the market breaks down the 50 SMA, which it breaks down right there. You, in theory, would have still made money on that trade. Not much, but a little. If you bought specifically at the transition above the 50 SMA and held until they stopped you out below the 50. So you had all of this opportunity to make money. And if you said, I'll just wait until the trend flips neutral to bearish, then you would have stopped out a couple days later here and still made money. And then avoided the drop where you would have lost. Because that is the system of the stock market. That is how the algorithms in the short term work. That's how we move price from positive to negative. That's how we understand stop out and trend, etc. So now that the market is back to negative, we're just going to not trade it. We're not going to be bearish. We're going to be neutral, but we will add long the next time it starts to break over. So now the market starts to go positive right here. So we're back long. So from here, the market went negative. So that was on, I don't know, let's see, December 24th. So from December 24th, we decided to not participate in the market. We didn't go bearish. We didn't trade it bullish. We just avoided it from December 24th until, December 27th of 24 until June 3rd of 25. So pretty much we went from end of December 24 into the beginning of January 2025. We stayed out of the market this entire time, and then when we went back to positive, we entered long. And now we're trading the market back up long. So we had all of this time to take some profit on the trade, and we could have put our stop out below the 50 SMA. All right. Market comes down, and you stop out. Okay, so now we're back to neutral. We're not going to enter long the market until it goes back to positive. And so we avoid the market for a couple weeks, and then eventually one morning during the pre-market session, the market starts to break out in the pre-market session. You maybe get long there, maybe somewhere in the gap, and then you're back long the market. And what happens? The market, oh my gosh, it goes up. That's crazy. Who would have thought? So now you're long, and you can take profit along any of that move. Oh my gosh, look at that. It's still going. You take profit, and then you put your stop loss where? We put our stop loss here, below the 50 SMA. Well, actually, our stop loss after entry was below the 50 SMA. So earlier, it was here, then it was here, and then it just keeps going with the 50 SMA all the way up until the market breaks down the 50 SMA. One random morning during the pre-market session, you stop out. And then you're back to neutral, etc. So that's pretty much how the stock market operates every single day, day in and day out, week, month, etc., 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 etc. Excuse me. So pretty much for you now. Oh, dang it. You don't see that. That's my fault. I am just an idiot. That's too good. I forgot to change the screen that entire time. Wow. Well, there's 24 minutes of pointlessness on the stream, but that's good. So this is the chart I was talking about. The fact that you're still sitting here after me just screwing that entire thing up that whole time is actually kind of more impressive, to be honest. Yeah, so here you go, boss. There you go. We'll go back to it. Ready? We'll just keep it simple. This is the 50 SMA. It's a 30-minute time frame. 30-minute. When the market is over, it's bullish. If you go below it, you're just neutral. We're not even going to talk about short, just neutral. So you're neutral. When the market goes back above, you go back long. That's it. Right now, you can see the market's at the 50 SMA. Why? Because today's FOMC. They're going to do the interest rate decision. So the market is prefabricating a setup. We today purposely moved the market to the 50 SMA. Why? Because what's the point of buying the market sky high right before FOMC, right? So if you look at today, it's like, okay, why were we going to scream the market up long when today's FOMC? Probably not, right? It could have, right? You can always do whatever it wants, but the reality is we know that the market dictates long bias moves or bearish moves, and it starts those macro trend changes at the 50 SMA, right? So go back here. So go back to like this example right there, right? That's the macro trend change back to long. Today's FOMC. So we purposely priced the market, moved the market back down to the level that dictates whether or not we're going to go into a new sell move or we may continue the buy operation. And we're going to disguise that buy or sell program that arguably starts today, maybe even tomorrow, under the guise of FOMC. Though we're going to use FOMC and all of the momentum and all the volume that it brings to move the markets, but we're going to disguise not disguise. Theoretically, yeah, we are. We're disguising the buy and sell program under the FOMC catalyst today. That's pretty much what's happening. Like I said, tonight, after FOMC is announced, whether they do a rate cut, whether they don't do a rate cut, it is irrelevant, right? If the market tanks, you already know, right? Like for example, you already know that the news is going to look shitty tonight, right? If we go into a sell operation, right? We're right on the cusp of a breakdown, right? So if FOMC comes out and it's poor and the algorithms and the computers that control the market say, no, we want to take the price lower, they're going to enter the sell program right here today. The market will then go down. And as a result, the market will decrease in price. And as a result, all of the news articles on the internet will do what? They'll go, hey, oh God, Jerome Powell crashed the market. No, Jerome Powell didn't crash the market. The algorithms and programs that drive prices higher or lower based off of trend change flipped negative today on the same day that we had FOMC. And now FOMC will be used to disguise the selling program that was always going to come at some point or another. So a lot of people today will think if the price of the market tanks is because of FOMC, which, yes, again, it kind of is, but the reality is we're on the level that's going to dictate a new macro bearish move or not. And again, if the programs decide that they want it down, it's going to go down. You don't control shit. I don't control it. You don't control it. That being said, we have a really good idea of where prices of markets can go, but we still don't control that. We can control the forecast, the analysis of why things can go where they can go and all this, but programs, computers drive prices higher or lower. And essentially, anytime jobs numbers come out, CPI comes out, PPI comes out, housing numbers come out, FOMC, interest rate decision, any major data / catalyst, data, news, economic driver that comes out, they're simply used to drive the price of the market to and from desired price points. For example, like today, right? Today's a perfect one. So we have the 50 SMA right here. That being said, we know that on FOMC days, they generally try to take the price of the market back to the 50 SMA. We generally try to do that. Bullish choices. What's going on, brother? How are you doing? So yeah, generally speaking, the price of the market will always try to come to the 50 SMA on the days of the FOMC, etc. All right. So like today, our morning analysis said that we would look for a pop to short, and we would look to sell the market pretty much down to that yellow line. Why? Because FOMC, they normally bring the price of the market to the 50 SMA, knowing that We then do what? You look at where the 50 SMA is located and go, okay, we're going to be bearish back to there. But why to there? Why not bearish down to like all the way down here? Because again, it's FOMC. The algorithms and programs are going to use the FOMC to either kickstart a new buy program or a new sell program. So I'm not going to try to predict the market all the way down to here when I know that the price is 659.11 is the dictating point. And I don't dictate the market. Programs do. But what we can do is help the programs take the market back to where they dictate. The programs of the market will dictate a buy move from here or a sell move from here. You don't. Well, if they want to dictate that move from this point in the chart and you're trading up here, you can help them try to dictate that future move by helping them bring the price to where they want to start their dictating, hierarchy from. Okay? So, that being said, that's why we predicted the market should come back down to 659.11 today, and then did not try to play the market any lower, because now we're just going to let FOMC come out and let the program start running the market however they so choose, and then join the trend with them. All right. So yeah, we'll zoom back out a little bit just so we can kind of re-clarify a lot of this. So again, this is pretty much at the end of the day, this is the only thing you need to look at for the stock market to understand the trend of the market. Just looking at this solely won't give you every sort of like nook and cranny of the market of how to enter along here, knowing when a 5-minute chart might pull back, but this will pretty much keep you on the right side of the trend every time. This will allow you to go onto YouTube and see YouTube videos about people saying the stock market's going to crash, and then you just giggle at their thumbnail because you know the market's in a buy signal, right? So for the past week, any YouTube video I came across that said, oh, the stock market's crashing, or look for this crash, I just giggle, right? Because I know that we generally don't have significant breakdowns or sell-offs in the stock market until we go into a selling operation. And the selling operations are only going to start below the 50 SMA. So this past, week and a half, you see a couple guys on YouTube or, some article from MarketWatch or Seeking Alpha, and they go, hey guys, the stock market's crashing, or it's going to crash, or it's going to do this. And you go, well, we entered a buy signal, and I know that algorithms won't really start to sell the market very harsh until we break down. Then I'm just long. So then you just giggle at their thumbnail because you know that they're on the wrong side of the trend, right? Anytime someone's saying short the market and you're in a buying operation, that's just wrong. You can sell the market, you can trade the market bearish when you're in a buy program, but you have to understand that they're pullbacks. A pullback is a downward move in the market while in a long uptrend, okay? A breakdown or a correction is downward selling that's breaking structure down. These are all pullbacks. You know it's a pullback when the price of the market's in an uptrend. How do you know the price of a market's in an uptrend? When it's in an uptrend, over the 50 SMA. The algorithm price point of the market that control buy and sell operations in the macro short term / swing-ish, kind of, So again, this past week, we go into a buy operation. Someone on YouTube says, buy puts, the market's going to crash in the next week. So you buy puts and then you just get roasted all week long. And then you just giggle. All right. So taking us back a little further, just as a little bit of a recap. This is a perfect system, but it's not perfectly tradable. Right? Remember that. This is as close as you can get, I think, until I learn something new. But for the moment, this is the closest you can get to a perfect system in the sense that it will keep you on the right side of the trend pretty much indefinitely, especially in the short term. And when I say short term, think of short term anywhere from hours to weeks. Generally not months or like 2 months, definitely not a year, but this is a system that you use to be on the right side of the market anywhere from hours to days to weeks. which generally speaking is what most people are trying to do as it relates to swing trading, day trading, etc. All right. So we're going to go back and we're just going to look at this, right? We're only going to be long bias traders. We don't care about being short. We're not trying to capture every move. The only thing we're going to do is we're going to be long bias traders or neutral, right? So watch this. All right, so we'll go back to this drop here. So since the market is starting to break down, we're just not going to trade. We're not going to be short. We're not going to be whatever. That's it. We're only going to trade long, right? So the market enters a sell operation here Wednesday, the 18th. Ready? It enters a buying operation on December 23rd. So on the 18th, it breaks down, and 5 days later, it enters a long operation. That long operation lasts from December, the 23rd until the 24th, really. So a 1 day operation. So this long operation lasted a day. I haven't really done a crypto update, but I will do a crypto update. Yeah, this long operation lasts a day. And then guess what? The market goes back to what? Neutral. So now we're neutral from Friday the 27th of December until June the 3rd of 2025. Then June the 3rd of 2025, guess what? We are back long the market. That long lasts, a day or two, a couple days. Ready? So there you go. Long lasts a couple days. Then what happens? The market breaks down again. So now we're just neutral to market, and we're neutral to market from Tuesday the 7th of January 25th or 25 until Tuesday the 14th January. So what is that, like 2 weeks? Or it was about a week. So we were neutral the market for a week, and then a week later we got the buy signal and we went back long. That long, we could have been in the swing long for as long as the 15th of January to the 27th. So 15, 27, so what is that, 12 days? So you had 12 days of swing long before the market went back to neutral. So then we go back to neutral, and you're just chilling again. And then you have a false little buy there, choppy buy here. So like I said, it's not going to be a perfect system. Well, it is a perfect system, but not perfectly tradable in every instance, right? So like here, look at this. It's a perfect system that when you're above, you can try to be bullish. Ready? So look at this. Look at this moment, right, where I'm putting this yellow line. Well, I don't need the yellow line. You have the SMA. So right here. It's a perfect system, but not always perfectly tradable. So right here, the market goes over the 50 SMA. Connor says you go back long. Okay, so say you do go back long. So you go back long, and this is like towards the close of 1 day. So you go back long. So you're long for like an hour and a half. And then the following day in the pre-market and after hours, what's it do? It breaks down. So you may have been long for overnight. You were long overnight, and the next morning you woke up in the pre-market and they broke the 50 SMA down. So you take your trade-off right there. So your loss is basically nothing because you went long when market said to, and you took your long off when it said to. And since it happened in such a short period of time, from like the close of the previous day to the open of the previous day, it doesn't give the SMA time to change price very much. So your entry is basically your exit at that point. All right. And the same thing here. Look at the next day, right? So next day, let's just say you get long here. It breaks up. Following day, it comes back down and you stop out. It's basically the same price. Loss is like, it's like a wash. It's nothing, right? And then we'll say you get back long here because it breaks over the 50 SMA, and then you finally start getting on trend, right? So on and so forth. So that's pretty much it in a nutshell. That's how you stay on the right side of the largest globally traded ETF in the world pretty much every day of the week and day. All right, so it's a perfect system to follow, not always perfectly tradable, so yeah, hope you guys liked the video. I mean, just look at it. It's too clean. Ready? Neutral, back to long. Bounce, bounce, neutral. Back to long. Oh, look at that. Market came down. He said, I'm not going to buy long. You avoid a tire drop. And you can go back long, stop out. All right, and now we avoid, look at that drop you avoid. You stop out in the pre-market that day there, boom, you avoid that entire drop. And then you say, I'm going to go back long, so you catch long, and then you catch that dip, right? And then, there you go, then you're back long. You're back long until it breaks down. You go, I'm out, not going to do it. And then what happens? Well, you avoid that entire drop, right? And then you go back long. And that, you see what I'm saying? So it's a perfect system to follow. Okay, we'll go back to Bitcoin. So yeah, Bitcoin, I'm looking for Bitcoin to essentially go down right now. That's pretty much it. Where are we at? Let me zoom out some. There's a lot on this chart, but pretty much you can see current sell target. That's where we're looking for Bitcoin to go to. Yeah, I mean, am I going to be right? Probably. Will it happen very easily and, a fluent way? Maybe. We'll see. But yeah, I mean, there's a lot of lines on here. It's kind of a lot going on. To make it simple, for this to be super simple, it's pretty much this, right? Back here, we said go long with a target to 115,000 to 108, or well, it was 118,000, but as it took 2 weeks to get there or so the price calculated down. So essentially we had a long target for the entire internet on Bitcoin back to 115 to $117,200 or so. At which point you will start to then take profit and assume that the market will at least attempt a lower high. If it fails the lower high and goes higher, cool, don't care, whatever. But you just have to assume that after a bounce like this, you don't keep going straight up. You're probably going to be met with at least an attempted pull. All right. So right now we're assuming we're on the attempted pullback on Bitcoin on the weekly chart after completing the weekly long target. Ready? And why are we looking for resistance at a long target? Because a long target is like jumping into the ceiling. If you right now jumped into the ceiling in your room, what are you going to do? Keep going higher, or are you going to break your neck? Probably break your neck and then fall down. Why? Because your long target was so good that it was the ceiling. So yeah, you bumped your head. Same as if your sell targets are the floor. If your sell target is good, then generally there should be a bounce at it. Why? Because if you had a really, really good short target or sell target, it would be where? The bottom of a move. Hence, there should be a bounce. So that's why when Bitcoin runs up into our long target, we see that as it is hitting a potential ceiling. Because our long targets are not meant to be halfway in between the room. They're meant to be at the ceiling. We're trying to take longs as far as possible, tippy, tippy, toppy, tippy as we think possible. Could Bitcoin go all the way up to 125,000 right now? Yes, which then would say what? That this was not the ceiling. That's entirely true. But guess what? For the time being, it is in fact the ceiling. Why? Because we have gone to it and we are instantly having resistance. So a ceiling was put in at the tip of the long target. How long does the ceiling last? I don't know, and I don't really care. Why? Because the long target was met and resistance has come to fruition. Ready? So if we zoom in, you'll see weekly VWAP target 2, weekly resistance. Where does resistance happen? Exactly at $117,327, which is where this line is, which is our weekly volume weighted average price long target, aka resistance top. What are the odds that pinpoint resistance happens exactly at a level that we have on the chart with an asset class that trades in the hundreds of thousands? It's most likely just dumb luck. So, now that we have hit our long target here, we are now looking to pull the market back to about here. So we are about 90 to 85% complete with that trade thesis and trade idea and forecast. We're not saying you should short Bitcoin here and then try to go there. No. What we are saying is that when you hit a long target like this, generally you will find resistance, at which point you can backtrack previous trend levels, which is right here. So if you wanted to go for this current sell target, you should have been selling at the weekly volume weighted average price. If you had sold at the weekly volume weighted average price, or even close to it, A, your trade would be killing it. But B, your risk to reward experience, what you've actually experienced, right? If you shorted at the weekly target and go for the current sell target, that's like $1,600 down on Bitcoin. And if you entered at the weekly level, you've experienced zero risk. Yeah, you could have set up for a 1 to 2, which is fine. But hindsight 2020, what did you actually experience in the market? You experienced zero risk and only gain. Now, is it always going to be like that? Definitely not. It's almost always not like that. But that being said, that trade concept resulted in big gain, zero risk. Cheers to that. Cheers to the two homies in here. Love you. You guys are great. Thanks. Hopefully you can share the stream. Hit the like button. Leave 1,000 comments on the video. That way maybe YouTube will actually help us. We are now using this new channel because our old channel got stuck in the mud, if you will. Someone placed what are those? They put the wheel locks, those little tire locks. They wouldn't let us drive the YouTube car anymore, so we had to change vehicles. So yeah, pretty much that's what's going on with their old Bitcoin. And also, well, there's two of you, so Bullish Choices and maybe TZ. I don't know if it's still you, but if it's still you, thanks, brother. Yeah, so we're no longer, well, that's not true. I am long-term bullish Bitcoin, but long-term over the next year and a half, 2 years, I'm actually bearish. We're not long-term bullish Bitcoin. Well, we're long-term bullish, but long-term bearish at the same time, right? So we're like long-term bullish, but like long-term over the next year and a half, 2 years, we're actually bearish. So that's another way, that's another example of how you could be a bear for the next 2 years, but still do a counter long over the last 2 weeks. Think about that. We're long-term bearish, but told everyone for 2 weeks to go long Bitcoin. Why? Because there was a weekly counter trend long target, arguably setting up. Right? So just because you're bearish doesn't mean you can't look bullish. You know what I mean? And then while we're long-term bearish, bullish for 2-3 weeks, we also had bearish targets in here on the daily. So we were also bearish these pullbacks here, because we saw on the daily they should be pulling back. So long-term bear, 2 weeks up, shorter-term bear, building that. Essentially, that's how markets move through time frames. Longer time frames take longer to develop. Shorter time frames develop faster. Shorter time frames develop their patterns within the longer term time frame patterns, etc. So, yep, that's good stuff. So, yeah, we're going to run back to SPY, SPX. So yeah, by the way, guys, I don't know if we've mentioned this, but we're neutral. So that's another good thing. So I don't know if, I'm not sure who else is streaming on the internet these days, but here at the Boiler Room Network, which is really just one guy in an office with computers. That's it. But here at the network, we will tell you to not be bullish right now. You are neutral, safest play, or bearish. Okay? That's where you are right now. Literally. You are not bullish the stock market. You can bet bearish now, or you can be neutral. You will experience no loss and no pain if you're neutral. If you go bearish, there's the opportunity to make a win and also make a loss because you're invested in the market at that point. Okay? But one thing is certain. We will not look to be swing long, macro long the stock market until we think there is a new buying operation underway. That new buying operation does not start in this moment unless the price of the stock market was and is above $659.22. Okay? So, you're not bullish. You could be bearish. I'd still recommend not being bearish, so we'll add more to this. Safest, you are neutral, safest play, or bearish. Risk to being bearish. FOMC is coming up. So, you should let that happen as the programs, I'm spelling programs from FOMC will control the actual new buy or sell program. Cheers. Yeah, I mean for Bitcoin the VWAP settings are all the same. Yeah, I mean, yeah, when you see me use VWAPs on Bitcoin and VWAPs on the market, they're same settings. Yeah, I don't change any of that over. Nope, that's all the same. Also, another side note here that you guys may find interesting too is the volatility index. So TZ and bullish choices, as we were just covering the stock market and how he said, hey guys, when the market's above this, you're bullish. When it's below this, you're neutral or bearish. It's the same thing for the volatility index, right? So you see how the volatility index started what? So look at volatility index was bearish. And then what? And then it broke over the 50. So now it's bullish. Right? So we would have already been bear. I don't want to confuse you guys too much with that. But yeah. So generally speaking. So actually I'll just start it this way. The reason, look at this, right? You see how high the VIX is, right? You see for the past like 3 days it's gone straight up. So for 3 days the volatility index has gone pretty much straight up, okay? And the market went up this day, then it went up, then it pulled back, and then it bounced, and now it's kind of trickling off. So for 3 days, the VIX has gone straight up, and the market has not gone down. Most believe that if the VIX is going up, the market has to go down. which generally speaking is true. But we all knew, we meaning people that watch the market closely enough, and the programs of the market, what do they all know? They know that FOMC is this week. Interest rate decision. What happens on FOMC interest rate decision days? Generally, there's a lot of volatility, or volatility is more likely to be there or increase. So, if we woke up on Monday morning this week and we use our brain and one or two brain cells, and we look at an economic calendar, and we see on Wednesday of this week, there's FOMC, aka a volatility event, then the VIX in volatility will be going up. Because we all know it should be, and we already know that. So a new novice investor and trader will look at the VIX this week and see it going straight up. He will then look at the market and go, why wasn't the market going down? Because volatility is increasing because of what's to come, the FOMC. Volatility is not increasing because the market should be going down. What we're doing is we're increasing volatility on the market because we already know that there is a volatility event on the horizon. Another way of saying this is if FOMC did not or was not happening this week, today, and we saw the VIX going up like it was this week, we would already be selling the market down. Because at that point, it would be the VIX is telling us that volatility is increasing. So we listen to it. Unless it was like FOMC this week. So again, we use the VIX to determine when we should be selling the markets. But the VIX can trick you. Like this week, when it goes straight up and the market doesn't really go straight down. And that's because we're not increasing the VIX to bring the market down yet. We're increasing the VIX because we know what's to come on Wednesday could bring the markets down. It's forward looking. It's forward thinking. The markets are always forward looking and forward thinking. Hence, when you wake up Monday and you know forward looking event, volatility event, FOMC is this Wednesday, then no shit, volatility will be increasing that week on the market. Though it may not be reflected in stock market prices, it's being reflected in the volatility index. What you're seeing right now is insurance. People, the markets, programs, those that are smarter than the beginner know that this, what you're seeing on the VIX, is programs and markets buying and insuring themselves against the potential of an FOMC event that does what? Tanks the market right at the starting point, our directional macro trend change. If volatility is to come and the markets to get smoked, it's going to happen today off of FOMC or tomorrow, right? As the market finally shifts into a bearish trend, where below the below the 50 SMA. Okay? So what you have seen this entire week is volatility increase. People in markets, computers, and algorithms buying insurance because they don't know if there's going to be a flood. They don't know if their house is going to burn down. They don't know if a tree is going to fall on the roof. All they know is there's a storm that's potentially brewing. It's on the radar, and it's coming this Wednesday, which so happens to be today. So on Monday, we all woke up. We checked out our weather app, and the weather app said, oh shit, brother, there might be some tornadoes, or there might be a hurricane. So maybe you want to get insurance. So as a result, this week, everyone bought insurance on the volatility index in the expectation or in the event that today's storm has, a catastrophic event where it falls down. All right. And if FOMC does not bring, floods, then all of those that bought insurance, well, sorry, but doesn't really matter. You bought insurance, you paid for it, you were protected, and yes, no flood came, market went straight back to the longs. That's it. Okay? So that's what we're seeing on the market is there's a lot of insurance buying into FOMC, prepping, planning for the potential of a downfall. All right? Whether or not it comes is another story, right? But the market is saying it could be there, all right? Which is generally always the case on FOMC. So your takeaway from all of that is next FOMC, if you see the volatility index increasing, right? Just say to yourself, no shit, duh, it should be going up. Why? Because we have a potential catastrophic weather event coming this week. It's called FOMC. It could flood my house. It could burn my house down. So I'm going to get insurance. The market doesn't have to go down right now. Why? Because the flood may be coming on Wednesday, not on Monday or Tuesday, etc. So that's why you pretty much saw Monday, Tuesday, the market not really break off into a long, but also not really go into a big short. Because why? Because FOMC is coming, right? Volatility is going up, but we know it's only because of FOMC, right? So we're not going to sell the markets down really harsh. We're also not going to buy the markets up really harsh knowing that volatility is breaking out. So you pretty much have this sideways market until the deciding factor. And then we'll find out if those buying insurance on the VIX were right and it tanks, or if those buying insurance on the market were wrong and it rips. Okay? That's literally where we're at. That's exactly what's happening. If anyone tells you differently, then, well, maybe they just know more than I do. Or either they know less. But again, I am not the master trader, master investor. I've had great years and I've had some really, really shitty years of losses. But one thing that happens amongst all of that is you always learn and you learn something new and you get better. And the better you get, especially the more you know, the more you want to share to help others avoid catastrophic mistakes. Now, the more you learn and the more you want to share good things, usually the less your voice gets heard. Because the more people that stay on the right side of the trend is less money for the market to steal from you. So the idea is they want more people positioned on the wrong side than the right side. That's why you'll see a stream with 6 million people, or 6,000 people, or 6,500 people watching right now. We're saying, let's go long the market. Yes, of course, that's a stream that's going to get views because that's a stream that's going to cook people if we do go into a sell move, right? Everyone's saying, go long FOMC, it's going to blow up. Has no idea that we've perfectly positioned the market to clap everyone going long. Also, it could clap everyone going short. I mean, that's kind of it. But that's the thing is most people have no idea that we have perfectly set the market up. We've prefabricated the market today to pretty much throw it into a sell move or to restart a buy move is the thing, right? So that's the thing is if everyone's like, hey guys, go long FOMC, they have no idea this could be the start of a breakdown. And then you go into a bearish swing for the next 2 weeks, right? So, you know, if I was the internet and I controlled stuff, I would push people to the stream that's telling them to go long, even though we may be starting a sell signal. And I would not put as many people on the stream that was saying, hey, we're right at the possible sell signal. That's how you keep, trap more people on one side of the market, I would assume. But anyways. I have titled today's video, or today's stream, what is it? FOMC, algos, positioning, market. So I have typed in the exact wordage. Well, I missed something there. I typed in the exact wordage of our video, yet still can't find it. FOMC, algos. Let's try that. That's even more correct. Nope, they still don't want to show my video after exact wordage. How about the next word, position? No. IT. Nope, they still don't want to show my video or my stream, which again is kind of weird. Let's try the next word, position market. Nope, still not there, even though we've typed in almost the exact title of our YouTube stream. Let's try the next word, 2. Nope, they still don't. Wait, all right, let's try the next one, start. No, wait. Okay, there we are. So you have to type in 90% of the exact title before they'll put it on the first page. I'm sure that's likely to get viewed. Makes sense. So I have a better idea. We will just we're just gonna copy the most popular title and then we'll put it there, which I'm sure won't do anything. Perfect, there we go. So now we have the most popular stock market live stream title on YouTube that seems to work, so we're gonna use that one. For those of you that may end up watching the stream later on, which probably really won't happen, because who the hell is going to go back and watch hours of stream? Probably not many. But anyways, where's the bowl? Huh. Where's he at? Little bowl. There you are. Alrighty, so yeah, for those of you that may watch the stream, pretty much what this means is we're not long biased we're not long biased the stock market anymore, or right now. Again, you are bearish or neutral. It's super easy. It's super straightforward. Oh my goodness, how is that possible? How did he do it? Ladies and gentlemen, how did he know to tell you that you just bearish, you no bullish? He saved you money. You're saving money. Oh my goodness. Bitcoin about to go down to 115,000. Oh my goodness. Oh my goodness. Is it going down? I'm sorry, folks. All I can do is just giggity. Oh my gosh. What is going on? Why is the market going down? Who knows? Does anybody know? No one knows. It's a mystery. It's a gosh darn schmystery. This is crazy. The world might be ending. Oh my goodness, everybody. Who would have thought that the market is going bearish where it's supposed to be bearish? Oh my goodness. It's so crazy. I'm going to get a coffee because why not? So I'm going to throw this on the screen. BRB, getting coffee. You are neutral. Just you know, just to keep it simple. BRB, getting coffee. I will be back soon. Don't go nowhere. Love you. Welcome back to your arts and crafts class. In today's video, we're going to talk about making buy and sell operations. Yay! Yippee! Wahoo! It's really straightforward. The market is below the 50 SMA. So you are now neutral or bearish. Pick whichever one you want, but one of them is not bullish. Swing. You're not long swing the market. If you want to be a bullish or long bias trader in the current stock market environment, you are a bearish long trader, which means you are counter long trading currently. You are not trend positive or swing long. I know that voice is probably getting a little annoying, but you know, sometimes when you just be really stupid with it, you can get points across pretty simple. But yeah. So if you're going to do any long trades, you're buying counter longs and or oversold reversals, but you are not in a long bias market environment in the macro. The text is on the screen. If the market is over the yellow line, you can arguably be back bullish. If it's below the yellow line, you're neutral or bearish or counter long trading. That's it. There's no if, ands, or buts. That is it. That is as simple as you can make it. The most simple thing you can do right now is just do absolutely nothing. Just do nothing. Stay neutral to market. Don't worry about FOMC. And if the market goes back into a new buying operation, let's just say next week, then you just go long next week. That's it. So you could literally just be sitting here doing nothing on the stock market for a week and a half. 2 weeks. I don't know. Maybe it's 3 hours. But you could be simple with it and just be a long bias investor and long bias participant of the market, which means at this point you do just nothing. And you just sit back and literally do nothing. That's it. I wish I had. No, I don't wish I had more to say. No, I'm glad that's it. That's all you really need to know. You will be on the right side of the market 100% of the time. That's another thing. Now that we've got 2 more of you guys in here, a whopping 2. Yeah, what was I gonna say? The whopping 2 of you in here. Yeah. Yeah, so this system that we're talking about, again, it's correct 100% of the time. It's always correct. The system is never wrong. You're wrong. Appreciate you, Mr. Oh, yeah, from chat. Yeah, Croatian. Yeah, you're from chat. Appreciate you, homie. Yeah, again, the system that we're showing on the screen, 50 SMA stuff, it's never wrong. You're only wrong. That's it. The system's never wrong. You're wrong. So it's always 100% correct, but not necessarily 100% tradable or 100% easily tradable. It's never wrong. It's always right. But just because it's right doesn't mean the trade will be easy. All right. So again, this is kind of that moment where you just sit back and you look at the market. You know it's below the 50 SMA. You know that you could be entering a sell operation. You sit back, and again, you just be neutral. Or you can trade bearish. There's nothing to really do here other than trade bearish, be neutral, and then wait for FOMC. That's pretty much it. Yeah. But the best part is you can go on YouTube right now, and yeah, I mean, I wouldn't say there's a bunch of people on YouTube right now, but just in general, right? You just know you're looking at the market, you know it's coming below the 50 SMA. There's no real reason to be extremely long bias right now, you know, and so you just kind of sit back, you giggle at anyone that's going long this, because you know if FOMC comes out poor and we do the sell signal, the market just gets smoked, right? And all you had to do is just do nothing, not be long, just avoid it. Why? Because trends are maybe changing. And actually, we showed this earlier this morning. I'm gonna take us to a pre-market chart. One second. It was actually in our Discord that we posted this. I mean, there's only like a couple of you, half of you probably from Discord. Again, the internet generally doesn't. Yeah, Jenner doesn't like to give us new traders to the market because the stuff we would teach them would advance them far too quickly. But yeah, so you guys can see here for the couple of you in here. Earlier this morning we talked about bullish, bearish, over, under. You can see we started drawing a head and shoulders pattern. So you can kind of see how, right, you see how in this photo we got here, you can see this head and shoulders formation. You see how the neckline, if you will, is the 50 SMA, right? So if you think about head and shoulders pattern, head and shoulders patterns are taught to be bearish. They're bearish when the neckline breaks down, right? So you see how we've created this head and shoulders here. This was earlier this morning, how the head and shoulders is created, and then how the right shoulder is dropping into the 50 SMA. So if I zoom in, right, you can see that, how the right shoulder drops down to where? The 50 SMA, right? So the 50 SMA is what? The 50 SMA is the over-under. It controls whether the market will continue to trade positive, or if the market will flip and start to trade bearish. So you can see how the market over the past couple days formed the top of a head and shoulders pattern. And then as we transition into today, they use the 50 SMA as the neckline, right? Which is, again, the over-under dictates bullish bearish, right? So we created that head and shoulders into today. And so you see how we broke that down, essentially. Hold on, let me bring us over to SPX or whatnot. Right, so look at that, right? So we know that if the market goes below 50 SMA, it can go down, right? And if it holds above, then the long stays true. Right, so you can clearly see how over the past couple days we created, you know, arguably this. Hold on one second. Let me flip SPY. It's supposed to be on pre. Maybe that's what it was. It's just extended. No, that's right. Maybe I just drew it weird. But anyways, I'll go back to SPX here. So again, we're looking at SPX, right? You can kind of see how, you know, if you will, I mean, whether it be this one, right, and then this be the head. And then that's kind of a rolling breakdown. You could look at it that way. Or you could look at it as it like this, where this would be it. And then the breakdown of your head and shoulders is because the market actually finally gave up the 50 SMA. So a lot of people, actually probably not a lot of people, very, very minimal people would really see that. But there is the likelihood that a lot of people may have saw, right, like this head and shoulders, right, And so they're going like, oh, the neckline broke down, so that's why we're going down, right? So if I were just to take this 50 SMA off, right? So if I just take off the... Wait, hold on. I just put it back on. Damn it. So, right, if we take off the 50 SMA, right, someone could be like, oh, look it, right? So there was like, or just in general, right? Someone would do this. They would go, all right, so the market's been bouncing here, and so, right, they go like this. The market was bouncing here, so that's support. Support broke down, so that's why it's going down. No, not even close. I mean, yes, but no. No. That's not what happened. See, what had happened is that really we have the 50 SMA here. And the 50 SMA is what's going to dictate bullish or bearish trading environments. And it just so happens that people were buying the market here, which then makes it look like that was support. But reality is the market was just in a buy move. Market was getting dip bought. Trend is arguably changing, so now we're going down. That's it. And it just so happens that a head and shoulders kind of formation appeared into there and so on and so forth. So really cool. You'll see that from time to time, actually, you know, more often than not. Actually, there was a pattern on the VIX the other week that happened that was pretty cool. We had a bull flag take place on the VIX. I'll find it. It was on the 15-minute. So if we take this and put this on a 15, pretty sure. Come on, computer. Work. Oh, don't be doing the slow stuff now. Thinkorswim. Just trying to slow us down. Yeah, so we found this one on the VIX the other week. This was used on a 15-minute, but I need to increase the look back period. No wonder why. I was like, what's going on? Right here. Yeah. Or was it? Hold on. Yeah, that was it. That's just, it looks different, but anyways. Oh, there was a couple of them. Well, I guess there's kind of two. These aren't, yeah, it was this one back here. Now, this doesn't look like a whole lot, but we did use it effectively that day. But there's pretty much like this bull flag, right? So up, and then the bull flag is really the 50 SMA, right? And then your breakout of that flag, again, is the 50 SMA on the 15-minute. So a lot of times if you do see patterns, I like my patterns to line up with specific like SMAs, and then I know it's probably legit because moves like breakouts happen at SMAs, generally speaking. So like this one here, you kind of had like an upward flag, if you will. And the breakout, again, is the 50 SMA, and there's the pop, right? So anyways, we had a couple of those kind of take place over the past week or so on the VIX, or 2 weeks. So was really just trying to emphasize the point of, which is a lot of times you will see patterns start to form, and a lot of times their breakouts or breakdowns of patterns are going to be, you know, they'll line up with an SMA, right? So that's why today I'm like, oh, like, hey, there's kind of like a head and shoulders pattern, because it makes sense, right? Like there is a head and shoulders, and the breakdown lines up with where a breakdown should be, which is the downtrend start of that move. So that one kind of makes sense. I do use the 1 hour, and it's great. It's Alex and Grace. Hi, Grace. How are you doing? We do use other time frames other than the 30-minute. Let me rephrase that a little bit. Every single time frame operates the exact same way. That's it. Yeah. Every single time frame operates the exact same way. The frequency increases or decreases as you go down or up in time frame. So smaller the time frame, the more frequent you will see things happen. Longer the time frame, the less frequent they will happen. But whether or not it's a long time frame or a small time frame, the operation and the ebbs and flows are the exact same. So the reason that we look at the 30-minute, for example, right? Why not use a weekly chart? Why not use this strategy this way in a weekly? Well, we do use it like that on a weekly. But look at how long the buy signal for the weekly lasted. So the weekly long operation starts here, and then it ended here. And then a new one started here, and that one's ongoing. All right? So for us to be involved with more uptrend starts versus, say, 1 and or 2 for the year, we will run this down to, say, a 30-minute chart. And the reason we'll do that is because the 30-minute chart is not super fast. It's not super slow. It's a comfortability right in between. So much so that it pretty much captures all of the decent short-term macro swing moves in the market, while also keeping you out of all of the macro swing bearish, decreases of the market. All right, so it's not such a fast moving time frame that it's unreliable or there's a lot of false signaling, and it's not so slow that there's not very many opportunities to involve yourself. If you looked at the weekly chart, you had 2 opportunities to theoretically buy at the lowest possible risk with most profit. You had 2, right? Over the past year of the market, you had many opportunities for longs. I mean, there's longs all over the place, right? So you had a long here, there was a long opportunity there, long opportunity, long opportunity, long opportunity, long opportunity, long opportunity. So there's 7, 8 there over the past couple months versus the long term gives you 2, right? So, I mean that's pretty much it. Is in terms of the operation, right? The 1 minutes do the same, 30 minutes do the same, 5 minutes do the same, so on, so forth. So watch this. Ready? All right, so what are we seeing right now here on this chart? All right, let's look at this real quick. All right, so I'm going to show you kind of like the ebb and flow between multiple time frames here real quick. Again, there's not a whole lot to say. I don't have to say anything right now in the market. You guys already know. When you say, what's the play, Connor? The play is you're neutral or you're bearish, but you're not bullish. And then to add on top of that, I would suggest just being neutral. Why? Because we still have FOMC coming up. So though we're below this level, and that means bearish or neutral, I'm saying don't really look to play bearish in the sense of holding. You can scalp them, you can trade short, but you're waiting to get through FOMC. Okay? So in the meantime, there's the only play is neutral or bearish. That's it. Okay? And so, we'll look at this. Ready? So we know that this 30-minute just broke down. That's why you're neutral and you're arguably bearish, right? But as this 30-minute trend, or as this 30-minute chart went down, all right, you were asking, why not use an hourly? Why do we use a 30-minute? We do use the hourly. Ready? If this market goes through a full breakdown and breaks down, right? We know that the 30-minute is in a downtrend. Well, where's that 30-minute downtrend going to go? Generally, it's going to go to the 1 hour. So you see how the 1 hour is still in an uptrend, right? So if you look, right, 1 hour's in an uptrend. It went in an uptrend there. So it's up, 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 up. Okay. And we know what? We know this yellow line. We're just going to say the yellow, because that's what we've been talking about, right? That's the 30-minute. So watch. This is the 30-minute. 30-minute 50 SMA dictates swing long or swing short, swing short, macro trend change. Okay, so what are we seeing? We are seeing that the main time frame we focus on for macro trend change, it's the 30-minute. The 30-minute is starting to flip downwards. So we are neutral or bearish. When do we go back bullish? We will go back bullish if the 30-minute starts a new uptrend, which would be what? Which would be getting over the yellow and starting an uptrend. Or we may look back to bullish if we hold the uptrend on the 1 hour, which would be here, right? So essentially the 1 hour is positive. The main time frame just went negative. Its next most important time frame would be the 1 hour, which is down here. So whenever you start a downtrend on a time frame, you look for that downtrend to last as long as the next new potential uptrend support. So if the 30-minute enters a downtrend, many times we will look to the 1 hour trend support, which would be here. So if FOMC goes terrible and does do a full-blown sell signal move, I'm assuming that the market will go to here. Whether it be today or tomorrow, the market will transition to the 1 hour. That's how I see that. That might have been a confusing way to say that, but ultimately, if you use a 50 SMA, and that's the only moving average that you look at, the 50 SMAs dictate uptrend or downtrend regardless of the time frame. They are the uptrend or downtrend midway point. So if the 30-minute flips negative, I then look for it to go down to the 1 hour that's still going up. If the 1 hour goes negative, I look for it to go down to the 2 hour that's still going up. Okay? If a 30-minute goes down, or let me phrase that, right? So I'll show it to you on smaller time frames. So what you gotta know is every single time frame either has an uptrend or a downtrend, right? So as things are going down, you're attacking the uptrend that's still left. Okay? That's what you're doing. Whenever something is selling down, you sell the market down to where you think the next uptrend level that is untested is at. All right, so what we'll see here, ready? This 30-minute. Let's go back before it broke down. So look at this, ready? So watch this. I'm just gonna put a look at this yellow line. Just gonna add that yellow line there for support. Even though it's broken, we're just putting it there as a reference to where that 50 SMA is at. Now watch this. We're gonna go into a 1 minute chart here. Okay, ready? Watch. Okay. Not that you would necessarily use this for, to make, amazing trades. It's to understand how the market breathes and moves, okay? So, this here is the 30-minute, call it main SMA, okay? Market sells down to it. It's not below it, right? So that means it's still what? It's still an uptrend until it goes below. So the market is still positive when it's above this yellow horizontal line. It's positive. So the market does what? It sells down to where? To the uptrend, downtrend, over, under. If above, market is still positive. If below, market is negative. So let's think about it like that for a second. So above is still positive, below is negative, okay? So as the market on today comes down into the 30-minute, what does it do first? Instead of just break down, it tries to hold support, okay? Now let's look at the 1 minute. Where did the 1 minute 50 SMA break down? So this is the breakdown of the 1 minute trend. Which again, remember, 1 minutes will repeat very frequently, right? Because if you look, The 1 minute was positive, then it was negative, positive, negative, positive, negative. Ready? Today we tested the 30 minute. 30 minutes positive, now it's negative. So think about it like this. This 1 minute broke down. Where was the 1 minute trend back test after the breakdown? Right there. That's the back test. Okay? Back test. That's your back test. Okay? So, real quick, ready? Watch this. It's kind of backwards, but the same. Ready? So, look at. So, this is a 1 minute 50 SMA downtrend. And this here would be the back test of the 1 minute breakdown back test. So, this morning, when we sold the market down to 30-minute support, the market bounces. What does it do first? It backtracks the most recent or closest nearby trend, which in this case is the 1 minute. So pops back to 1 minute. Now the 1 minute gets the opportunity to remain in a downtrend because you had the breakdown, 1 minute's down, which is really a pullback to the 30 minute. We know the 30 minute is still positive, so it gets supported. It bounces until it tests the first level of a downtrend. Most recent downtrend to come into play is what? It's the 1 minute. Okay? So now we're going to reverse all of this. Ready? So think about how the market on the 1 minute broke down, and this was its back test and its attempt to stay bearish. Think about that. Break down, back test 1 minute. 1 minute tries to stay bearish. Okay? What did we just see today on the 30 minute? The exact same thing, except it's opposite because it's bullish. Ready? So what did we just see today on the 30-minute trend, which we just saw inverse of the 1 minute? Ready? Here is your breakout. Breakout. Okay? Here is, ready? Your back test. Back test. Okay? Where was the back test? The back test is what? The 50 SMA. Where's the 50 SMA? The 50 SMA is this horizontal line I just put in the chart. Your breakout, long, back test. What did you just see today on a 1 minute? A little bit ago. Okay? What did you just see? You saw the same thing that you've been seeing develop on the 30 minute for a couple weeks, but it just happens very quick on a 1 minute. This is what? That's the back test of 30 minute. Okay? It's the same thing you saw here. The breakdown and the back test of a 1 minute. It's just happening on a larger scale 30 minute, which I'm trying to zoom in on, but, you know, TradingView likes to be dumb. So that's all. So what we just saw happen today on a 1 minute chart not too long ago is the same thing that we're doing on a 30-minute chart, which is over a couple weeks. Okay? So what I was trying to emphasize there is the same exact pattern happens on every single time frame, no matter what. It's frequency. Okay? It's frequency. What up, Sam? What up? You know, new channel, kind of. It's grown in like 2 subscribers, so I know that's cool because YouTube still removes a couple hundred subscribers from our other channel a month. And then, but this channel, they actually allowed us to grow by like 2 subscribers. So we at least know that sort of, you know, BAN is not on this account. Maybe. Who knows? Honestly, it doesn't really matter. But yeah, so that's the gist of it. That's what's going on. Again, we really don't care what happens with FOMC, you know, whether they lower rates, don't lower rates. It's all irrelevant. Yeah, so that's all the market does is just transition to and from different time frames. So I'll even show you here. Watch this. Actually, I might need to use a different chart for this one. Here, I'll show you. Ready? Watch. So just as we were talking about, markets moving through different time frames. Watch. Well, we don't need that fib anymore. Remove that guy. All right, so oh yeah, so remember, we're just talking about moving through time frames. So we'll start from like, I don't know if it's better to go big or small on this one, but we'll do this. Watch this. So we'll go back to the 1 minute, right? So we know the 1 minute broke down, right? And then it back tested. So you had your 1 minute breakdown, and then you had your first initial back test here. All right, let's transition to a 2 minute, right? So now we're gonna go to a 2 minute chart. I call him back. All right, so look at the 2 minute. Ready? So what happened? So the 2 minute broke down here, and then the 2 minute pretty much back tested here, or you could say here. So you can see earlier was the 1, right? So this was 1. Then this is arguably a 2 minute, or well, 2. Okay. Now let's go to a 3 minute. We'll go to a 3 minute. Okay. So we'll call this one really, because that one's pretty much the 3. So we'll call this the 3 minute. 3. All right, now let's go to a 4 minute. No 4 minute tag. So 4 minutes still, which is also a really odd time frame, but I never really use a 4 minute. I'll occasionally look at 2s and 3s, but very rarely. 5 minutes untested. So what we know is that we had a 5 minute breakdown here. We had a 1 minute breakdown, a 2 minute breakdown, a 3 minute breakdown, a 4 minute breakdown, etc. The 1, the 2, the 3, they've all back tested. The 5 minute did not back test. Now you might be thinking, well, what about the 5 minute? If the 5 minutes, does that need to be a back test, etc., etc., etc. Well, either way, look at this. So the 15 minute, what happened to the 15 minute today? The 15 minute broke down, right? So we were up, and then what happened? The 15 minute broke down. When the 15 minute trend breaks down, what do? We look to the 30 minute trend. So what happens after the 15 minute breakdown? Ready? Watch this. So after the 15 minute breaks down, what's that do? We look to the 30 minute. So we broke the 15, market moves to the 30 minute. If the 30 minute goes into a full-blown breakdown, where do we go? We go to the 1 hour. Where's the 1 hour? The 1 hour is here. So like I said, that's the progression of uptrends, downtrends through smaller to bigger time frames. Essentially, when the earlier time frame, let's rephrase this. Let's say everything's in an uptrend. Every single time frame's in an uptrend. When the long-term, daily, 4 hour, 30 minute, hour, 5, 1 are all uptrending, the first to go into a downtrend will be the 1 minute. The 1 minute will then test the 2 minute uptrend. If the 2 minute uptrend breaks down, it will test the 3 minute uptrend, and then the 4 minute, and so on and so forth. When one uptrend gives up, it then tests its next uptrend. Okay? It's like a line of people, right? There's just a line of people. When the first person gets knocked out, you go to the next. And it's understanding how far each one of those people are in the line. If I knock out the first person in the line, is the second guy 20 steps away or 5 steps away? How far is he? That's where you generally will go next, right? So, realistically, when you're looking at the chart right now, you're either expecting the market to go down to the 1 hour with a full-blown sell move. If it's not a legit sell move and it's false, right? So let's call it a false sell move, a false breakdown. Then you're going to go back to the 30 minute, right? Because think about that. If the 30 minute fails its breakdown, which means it doesn't really sell down, and it doesn't go to the 1 hour, then where is it going to go? Well, number one, it would go back to the 1 minute, back to the 2 minute, back to the 3, back to the 5, back to the 10, etc., etc., etc. If the 30 minute doesn't continue its sell off and it doesn't go down to its next support, call it the 1 hour, and then it starts to backtrack back up, it will then attack all of the trends that are above it. What trends are currently above this 30-minute? Let's find out. So let's look at a 20-day 1 hour. Oh, that's right. The 20-day 1 hour is below. So if we don't sell off and we end up going back up, we wouldn't be targeting the 1 hour. Doesn't make sense. So let's go to the 30-minute. The 30-minute does make sense. We know that we broke the 30-minute down. If it fails to go down and then went into a new buy signal, we know that the new buy signal takes place over the 30 minutes, so obviously that would be a back-testable target. All right, well, what about, let's see, the 15-minute? Oh, yeah, the 15-minute's there, right? But actually, the 15-minute is currently priced above the 30-minute, so we wouldn't actually be targeting the 15-minute yet because the 30-minute's still below, so we wouldn't actually go for the 15-minute. Let's look at, I don't know, a 10-minute. Let's see where that's at. We'll go to a 10-minute, which I actually have all these time frames set up on the, but whatever. We'll go to a 10-minute. So the 10-minute still priced above the 30, so we wouldn't target the 10. We'll do a 5-minute now. The 5-minute is priced exactly at the 30-minute, so if we were targeting the 5-minute, we'd be targeting the 30-minute as well. So not really, but we know that a 1-minute, oh, actually, we already backtracked the 1-minute here. The 1-minute arguably is trying to go positive. Does it? I don't know. We'll see. Whatever, right? But you can see what I'm talking about is that if the market doesn't sell down, you're just going to retrace your fastest moving, in this case, downtrend SMAs. All right? And the main SMA, again, is the 30-minute. So we're not really looking at 1 minutes and 5 minutes as frequently or as much. It's just something that you know is there and is going to happen regardless, right? So, like I said, if we don't just sell off, so if we're not going to sell off down to the 1 hour, then the most likely thing is we're going to come back to the 30-minute. If we come back to the 30-minute, we're going to go through the 1 minute, we're going to go through the 2-minute, 3-minute, 4-minute, 5-minute, all the way back to the 30-minute, etc. So on and so forth. Now, that was a lot of detail, but at the end of the day, what are we doing? It's pretty simple. If you're below the 30-minute SMA, you're essentially neutral to bearish. And if you want to be bullish, you're doing counter trend longs. Where could you be counter trend long to? Well, you could have been counter trend long back to the 1-minute 50. You could be counter trend long target back to, let's see, the 2-minute or the 3-minute. Where's the 3-minute? 3 minutes up here. You could be counter long to the 3-minute, etc., etc., etc. But again, our macro level is here. So maximum counter long for me, this would be the max counter long. So this would be here, max. Well, maybe not. It depends. What about SPX? Because SPX might be. Yeah, I mean, that would be it. So this would be our 1 minute. Whoa, 1 minute, 1 minute. Yeah, so this would be our counter long target right now. So, again, what we said before, you can only be counter long. And when we say, counter long, this trade level comes with a failed breakdown, meaning this right here, that was the breakdown. If we don't have continuation of the breakdown, the most likely event is the market goes back to there. Okay? With continuation of our sell move, we will look down to here. Give or take some. So our sell move target is all the way down here. So yeah, sell target for legit sell signal, price updates every 30 minutes. So for every 30 minutes that goes by, that level can change price a little bit. So if we, for example, didn't go get it today with FOMC or something, and let's just say like tomorrow the market sells off, this could update and be, you know, priced a little higher. Say it's like right there, right? So SMAs are ever calculating and changing as per their time frame and candle. So they change. Yeah, so the 1 hour, we use the 1 hour many times for long moves. Absolutely. You use the 1 hour on the VIX for longs, shorts, and you use the 1 hour on the markets for longs and shorts. So again, if you think about it like this, I'm going to delete all this bullshit. We already covered. Wait, no, I kind of want some of that. Hold on. All right, so this is what you just said. All right, would you ever consider going long the 1 hour? Absolutely. I would even, maybe not today, we'll see, but I need to add text. So again, you know, like you were just saying, would you add long? Yeah, so this is a 30-minute downtrend start level. Okay. This here is the 1 hour uptrend level. So this would be, if we sold all the way down here, this would be a 30-minute downtrend break. Market transitions down to the next foreseeable uptrend. Here you go long. And what that essentially would look like is, I'll find an example. That would look like this. Like this trade here, that would be like that trade there. That would be, you know, similar to this bounce attempt. Not really, it's more like that one there. Let's go back some. You can see, look at this one here. Look at, ready? See how it goes long and then it falls apart back to there. So this would be a scenario where if we zoom in, I'm not going to go all the way back. I'm just going to explain it like I know what happened, because I do know what happened there. So what ended up happening here, we can map it off. Hold on. Let's go on a 30-minute. Wait, where was I? Dang it. I got to go back to the 1 hour. I got to highlight. So this is the dip. So that was the, I need the buy. I need the sell too, but I'll know once I know that. And Alt V. All right. So now we'll go back to a 30-minute vertical line there. Perfect. So this isn't the greatest example, but you'll get the point. Right? Watch this. So there we go. So we're going to look at that horizontal line. So this horizontal line is where the 30-minute broke down. But if we go and we flip this to an hour, you'll see that same scenario. It's just a smaller reference, right? So what you have? You had here, the 30-minute breaks down, goes into a 30-minute sell. Where does it go? Down to the 1 hour. 1 hour trend support holds, goes. And then the 30-minute flips back positive. Everything's positive again. It just so happens that in this instance, the 30-minute was priced at, 629 or whatever, and the 1 hour is priced at 6280. Not very far off, but that's just the way it is. That's how they work. Okay. Then you go all the way over to where we're currently at. Again, zoom out, etc. And it's just the setup is obviously far different. We have far more room down to the 1 hour now than we did before. So we do look at 1 hour trends as tradable levels. Just take that 30-minute. The 30-minute is like 30 minutes like playing on a ping pong table. The 30 minutes right in the middle, and then as you return it to the other side of the table, a lot of times you're going to find the 1 hour. Then the 1 hour is going to return it back. etc. If the 1 hour doesn't return it, it's because that guy sucks. He missed the ball and it fell off the table, and now he's scrambling around the ground trying to find it as it's bouncing, right? You know, it's like, whoa, he's trying to pick it up, he forgot to return it off the 1 hour. Now it's fallen to the 2 hour, maybe the 3, maybe the 4. He's like, and he doesn't know, right? Whatever. So that's pretty much what's going on here, folks. I did forget one other thing. I mean, I forgot a lot of things in there, but I wonder how well our 1 minute 50 SMA strat worked here today. Probably pretty decent. So let's see. 1 minute 50 SMA rejections, which would really be that high. Kind of skeptical, but I know the 5 minute worked splendid. There you go. So what I'm going to show you now is something that I think works great. So ready? I'm teaching you volume weighted average price strategies on top of 50 SMA strategies. What's up, Oliver? How's it going? So ready? Where'd the market break down? Right there. Well, realistically, the market broke down here, and then it had the back test, and then but that's clearly the breakdown because it broke down and then rolled away, right? So whenever the market starts to break down the 50 SMA, we take a volume-weighted price anchor VWAP. We anchor it to the candles that start breaking down the 50 SMA. This is specifically for intraday momentum day trading while using a 30-minute swing trading level. So if when the market goes below the 50, it's bearish and things can go down, etc., then ideally we would want to trade in that direction. And if we want to trade in that direction in the short term, 1 minute, 5 minute, things like that, then we're going to look at a 1 minute, 5 minute, things like that. So essentially, this arrow is the macro bearish trend change level as per defined by the 30-minute chart. Okay. Now we anchor VWAPs to the 1 and the 5 minute chart. And essentially the way this works is if this is a legit breakdown and the market's going to trade bearish, the market will most likely stay below the 1 and 5 minute volume weighted average price. The better way of thinking of that is if algorithms control the market and they like to control the market positively or negatively above and below the 50 SMA, then ideally we want to try to trade in the direction of those algorithms that control the price. So if the algorithms control the price as it moves from the 50 SMA, we then take a VWAP, we anchor it to the exact price that we know algorithms are controlling the market environment at, which is the 50 SMA. And so if they break the market down at the 50 SMA and the algorithms are running things bearish, we want to track the volume of the algorithms that are starting that bearish trend change at the exact price they're starting that bearish trend change, so that we're tracking the VWAP of algorithms, but not necessarily just retail or just some random move. So when we have a breakdown, as said here, macro bearish trend change level as per defined by 30-minute chart, market breaks down. We then anchor VWAPs on 1 and 5 minute to that, and we assume that we are essentially VWAPing, whoa, didn't want to do that. We're essentially VWAPing algos. So now it's the VWAP of the algorithm, right? And now if we look at I'm going to look at a 1 minute, right? I'm going to map this off. We're going to take this. So we're going to look at 1 minute and 5 minute zone VWAP. Where is it at? I'll show you real quick. Change this to a 5 minute. So if we look at the 1 minute and the 5 minute VWAP of the breakdown, that would give us this yellow box, which I will now change to green. That green box, I'm going to go to a 1 minute. That green box is your entry short as it relates to that breakdown for momentum trading. Now, someone's going to be like, why did you enter short there and not enter short all the way up here? That has nothing to do with it. We had bearish pullbacks to here. That was it. So like today, morning analysis, be bearish to here. Then wait for the markets to decide. Do they want to be bearish? Want to be bullish? Blah, 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 blah. Market pops up, has a nice rejection. Anchor VWAPs. Now trade bearish into VWAP zone for continuation of breakdown. And there you go. So anytime the market breaks above or below the 50 SMA on the S&P 500, and you're thinking, is this the correct buy move? Are we going into a selling operation? Maybe. Anchor, VWAP, 1 5-minute candles at the break up or break down. If it's a legit buy move, usually the VWAPs will hold. If it's a legit sell move, even for a little bit of time that's workable, market will hold below VWAP zone and then trade bearish. Okay? Now, what? Now, the 1 and the 5-minute volume weighted average price from the breakdown become some of the main volume trends to follow for the remainder of the day. What do I mean by that? I mean that if you had entered bearish and you took a short here, and say you were holding a runner, one left on, a position left on, your stops would then be above the 1 and the 5-minute volume weighted average price. Right about there, right where I'm circling. That would be your stop. Why would that be your stop? Because if the breakdown is legit and it's going to keep going, it usually will not retrace above the 1 and the 5-minute volume weighted average price of the algorithms that are currently breaking the market down. That's the way I think about it. I think algorithms control it above and below the 50. When they start to move the market a direction above or below the 50, we track the volume of the algorithms that are controlling the market. And if those algorithms are going to keep controlling things down, they're not going to allow the price of the market to get above their volume weighted average price, right? Like if an algorithm is going to run shit down or run it up, then is it going to stop itself out? Probably not, right? So if algorithms are going to sell things down, then I would believe they don't want the price above their average volume weighted average price. But anyways, that's one way of thinking and one way of using volume weighted average prices in relationship to the S&P system. Cheers. So, anyways, yeah, I mean, that's pretty much it. On FOMC days like this, again, a lot of the very common scenarios you're going to see, like, for example, today, you see how the market broke down the 50 SMA here, but that's all before FOMC. That makes the back test very likely. So a lot of so for example, let's say FOMC wanted to be bearish. You know the rule that the first move is always different, or the first move is always false, whatever. That's a saying. Sometimes it's legit, sometimes it's not. But anyways, let's say FOMC wanted to be bearish, right, and stay down, right? It's got two options, right? It's the only two options this market has for FOMC to be bearish is it just bearish, or it pops all the way back up, back tests the over under, and then stays bearish, right? If FOMC is going to result in a bullish move and turn bullish, then obviously the market's going to have to do what? It's going to have to go up, and then it's going to have to recover the 30-minute. So obviously, whether long or bearish, again, it's all irrelevant. It's just about knowing the levels that the market is most likely to trade to, whether or not it goes up or goes down. So there's a highly likely chance we're going to see the price back to here before into FOMC, during FOMC. The likelihood the market transacts at $6,602 on SPX, or the price of, we might have already done it, or the price of $659.36 on the SPY is very, very likely. And I would contribute a lot of it to is that we have FOMC coming, right? And this breakdown in the market was a tradable breakdown, but the big catalyst is still coming. So is everyone trying to sell the market down? They're too early. We still need FOMC. FOMC could maybe drive shit higher. It could drive it lower. But are you willing to be the one that bets that it's going to go lower now? You know, maybe too early. So anyways, I do foresee the price trading back close to that 50 SMA, give or take a little bit. But anyways, you know. So let's see, what level did we just hit? We might have just hit like the 5 minute. No, not the 5 minute yet, but we probably got the 4 minute or so, maybe the 4. So remember we're talking about the only thing the market can do is just backtest previous downtrend levels, right? So remember we're talking about, you know, the closest trend to backtest would be the 1 minute. So you can see the 1 minute backtest, 1 minute flip positive. So we're doing a 1 minute uptrend move. That 1 minute uptrend move is going to go back to the 2 minute, and then it's going to go to the 3 minute, and so on and so forth. So we go look at the 2 minute, and you can see the 1 minute went back to 2 minute. The 2 minute's now positive, which means the 2 minute's going to try to run the 3 minute. Did the 2 minute run the 3 minute? The 2 minute did run the 3 minute. So you can see that real quick. I'll go back to the 2. Again, this is very small, minute stuff, but again, it's the point is understanding how and why the markets move the way they do. So this little line I'm making is a 2 minute. That's the 2 minute breakout. So the 2 minute broke out, so the 2 minute runs 3 minute. So if you go to the 3 minute, again, you will see real quick that that's where our current top's at. The current top is on the 3 minute. The 3 minute has yet to break out and go up. But if the 3 minute breaks out, then that means it's probably going to go where? Probably going to go 4 minute. All right. So if we look at a 4 minute, oh, it already pretty much did that. That's close to. So we got the 4 minute here. All right. Now the next would be a 5. And the 5 minutes next. So if the 4 minute breaks out, then we expect to jump into the 5 minute. So essentially, if things keep going up, then obviously you're going to hit prices on the upside. That's always kind of the dumb thing about it. It's like, oh, well, duh. If the price goes up, then it's going to hit the level that you're saying is just above price. It's like, duh. But it's more or less understanding why and how the price goes up. So as algorithms in real time are reading, oh, algorithm says 1 minute's in an uptrend. Well, what's the next thing to do? Progress the chart to the 2 minute. Does a 2 minute find resistance? No. Progress to the 3, 4, 5, 6, 7, 8, etc. So with the best case scenario right now being, again, that 30 minute back test. All right, so yep, that's that. And then as the market is moving up through these time frames, we can use volume weighted average prices on the micro to predict how high frequency trading computers will essentially whipsaw price action to screw with, you know, smaller time frames. So like this, you see how we had this dip here? We anchor the VWAP to that dip. That gives us the next expected dip support right there. So that's another way you can basically predict where micro pullbacks and charts are going to be. Not perfectly and not all the time, but pretty much, right? So now our next pullback, I can already tell you, is going to be well, it still has to populate, but our next pullback is going to be, I can already see where it's at. It would be like right around here where I'm drawing that blue box. It would be, I would like to be anchored to this candle low and to this one, but I need a couple more candles for data. But anyways, our current pullback target's like right there on the micro scale. And sometimes it can change. It just depends on how the chart develops. But anyways, it looks like we're breaking out the 4 minute, which means the market arguably is going to try to go up to the 5 minute. The 5 minute would put SPY back at 659.13. And actually, I got to track, let's see, this was SPY. There's a 1 minute V. That's that guy. Settings, low, high, yep. Okay. SPX. And that's another thing too, is you see how we're starting to get above that 1 minute volume weighted average price of the 50 SMA break. So that tells me that pretty much anyone shorting here and pretty much throughout this they're pretty much underwater, right? So if the market's going to go back to the full squeeze of like the 30-minute, generally speaking, you want to see it maintain above, and then it goes like that. It doesn't mean it can't go down on all the doesn't, again, we're not getting into all the nuances, but it pretty much just means that when you have a breakdown and the market's price is no longer below the intraday 1 and 5 minute, you start getting more likely of those squeezes back to the 50 SMA. If you're below the VWAPs, you usually don't have to worry about it too much. You know what I mean? But anyway, so yeah, that's that, which makes our back test levels now right about here. So now our back test, or our pullback price for, it's this yellow, it's the green box. So we're now expecting pretty much your pullbacks to be down to here. If they continue forcing up, it just means the pullback is just not ready yet. Thanks for the 6 of you guys tuning in here today. Love you. You're the best. All right, so the 5-minute trend has now been hit. As we said before, once you go to the 4, you go to the 5. It's not like that's amazing or anything. It's just, duh. Obviously, if things go up, they're going to hit targets you've had on the upside. Durr. So yeah, there's the 5-minute. As we said before, this thing could press all the way back up to about 659.36, give or take if it wants to. Essentially what we're doing is we're just squeezing out some of the shorts that we're chasing on this low. That's pretty much it. Not a whole lot more to be said there. All right, so again, our pullback target now in the micro is to 65898. So that pullback went to 65902. So that would mean about another 4 cents down here is what you'd expect, give or take. I mean, we're talking 4 cents here. It's not nothing crazy, right? But you can see how essentially the high of this candle sold all the way down almost to that box. We shied it by 4 pennies. But again, that's how you can expect how far a potential decrease on your micro chart is. So we have, again, just like I said, targets here and arguably back to here on that micro pull. I will be right back. Okay, I am back. Oh, Bitcoin, your coin is getting bid. Eric Trump. Someone posted this in our Discord a little bit ago, but it was Eric Trump says perfect hedge to real estate. What? Crypto perfect hedge to real estate assets. Yep, that's a short-term sell signal for sure. Honestly, Bitcoin's probably just retracing the 4-hour right now. Pretty common stuff. So let's just a little double check or Gucci. Maybe not. Honestly, probably not. Not bad, you know. Can we just get through the FOMC? Oh. Alright, well, you know, at the end of the day, market hasn't exactly retraced the 50 SMA, but is pretty darn close. Again, we said it could get up to 659.35. We hit 659.20, so, you know, essentially missed by 15 cents there. Market probably increased, I don't know, $8 billion there. Who knows? Don't really matter. Don't really care at the end of the day. All pretty basic stuff, dude. Oh, baby. Come now, Mr. J. Powell. What's happening in the bond? Well, what do you know? Bond prices are going up, eh? Because they're like, oh, they're going to cut rates, eh? But the market already forward-looking brought the price of the rates down, eh? So even if they cut, eh? Then it's like, okay, you do exactly what they thought, eh? Huh? So, yeah. Oh yeah, well obviously that pullback level we talked about happened, so really no surprise there. Pretty straightforward. We're just holding another long here off this low is all good. It don't even matter though, know what I'm saying though. So just holding a little spot there. We got a little counter long underway. Stop it. Computer work settings low. Thank you. Bing bang boom. Yeah, probably just going to do like a little bit of a long pop back here to screw with all the micro short sellers off this previous high. We probably already did it, honestly. Yeah, we just did it. So again, this would have been the counter long target for the micro high frequency trading right there. See that? See how we popped up and now you're getting resistance. Again, this was this high, down, pop back to volume weighted average price of that sell, lower high attempt, right? So pretty straightforward. Again, that's how you pinpoint where basically markets are going to trade to. Yeah, I mean, this is the last thing the internet wants, you know, some new beginner trader learning this week. Why the market pops exactly where it pops to in a micro chart. It's not exactly what they want you learning. They'd rather have you learning about a bull flag at all-time highs or something. Oh, daddy. Daddy. Eric Trump, what the heck, dude? You said it was a hedge, so we all got long, and now we're all stopped out, dude. The hell? About to show up to the White House with an IOU. Or with a you owe me, actually. Little Trumper Magoo. Little Trumper McPoo. Trumper McStew. Trumper McGlue. Trumper McRude. Trumper McNew. Trumper McPew Pew. I don't know how many more rhymes I can do. I think I've done them all. Let's go. Life is lit. Everything is lit. Yay. Wahoo. Let's see what the headlines of today's market look like. Probably like market slows on FOMC fears. Let's see. Stock market news today. Oh, what do you know? S&P, little change. Dow adds 300 points. Fed rate decision. Wall Street mixed as markets await Fed rate decision. Like, no shit. Gosh, anyone who actually reads these things, it's quite hilarious, honestly. Fed meeting live. Fed dovish. None of these people have a clue. Whoever is writing these, none of the people writing these articles have a clue. This is all a bunch of random bullshit. So, the Fed's first rate cut in 2025. Whoa. Huge stuff, folks. Big things. Yay. Sweet. Again, we're really just waiting for FOMC to happen so we can just see what happens. Throw some anchors on there, predict more price movements before they happen, sort of jam. It's all we're really here to do, folks. Nothing more, nothing less. Crack a couple jokes. Take it easy. Life is not so serious. If you're lucky, you're going to make it to 76. So you're probably already more than halfway through your life. Just chill out. Everything's fine. Here's a look at your market internals today. Not that many of you really care for that, but there it is. That's why your market traded pretty much the way it traded today. If you ever want to know the patterning and kind of moves of the intraday formation of the stock market, just bring up a chart, about 6 screens, throw the market internals on there. You'll start to understand why markets look the way they do on a given day, or when there's divergence among SPY and QQQ, why that's happening, so on and so forth. Hey guys, real quick, make sure you don't forget about this bull flag. Right there, sick bull flag. Yep, that worked. Hey guys, remember it's all about higher low, higher high, higher low, higher high, trend line this way, trend line that way, breakout like this. Yep, that's how that works. Wow, would you look at that? It's almost like the S&P 500 is increasing to $659.33, give or take. Kind of like we said it probably would do about an hour ago. But wait, I thought it was about the bull flag. What? Where was the bull flag? God damn it. Now I gotta start over. I must buy Tim Sykes' new program. Surely that will solve all of my problems. going along up that trend line. I've lost all my money. I can't afford even the cheapest of hookers. Yeah, it's fine. I'll probably just split it with my homie. Got 5 on it. Is everyone ready? Are you guys ready to see a candle go up or down? It's gonna be sick. I mean, honestly, at this point, I'm about to just start watching what other YouTubers are saying, because I need to know. So we're gonna pop that on the screen. So hopefully you guys enjoy.
Just make sure you hit the live button so you get caught up with the stream.
Why is this not working? Come on, baby. Let's go.
All right, guys. You guys ready?
Yes, John. We are ready. Where is market going?
Hey, listen, we should be over 36,000 or 160, whatever we're at. We should be over whatever big whole dollar number we want to hit next right now. Hit the subscribe button. Do it now. Everything's free. I don't sell a course. Don't sell a service. Don't even claim to be a good trader. Report stuff for free. You're welcome. We got 1 minute and 20 seconds.
Pop Amit
No cut,
from YouTube.
FTW, I don't think we're gonna no cut, but if we do, again, somebody said we're gonna raise rates. I told him if we do, y'all can call me dummy, and I have to respond.
I don't know what this is. It doesn't look like. Oh my gosh, we just hit the 50 SMA. Who would have thought? Crazy.
This timer's a little bit early. We actually have about 30 seconds, 25 seconds left. Yeah, markets are getting priced in for what the outcome might potentially be. All right, you guys ready?
All right.
All right, 5 seconds, 5 seconds.
So market has obviously retraced.
And here's the report.
SMA. All right, so yeah, my bad,
the report
y'all.
is now out.
So the market's back to positive, obviously. You guys can see that.
3.4 got changed
See
to
how the
3.6
SPX is broken over the 50 SMA? So you see how the long broke up right there? So again, that's just, we're on long pressure. Everyone bearish. We took them back to the 50 SMA, and then we just stopped them out and broke them up. So again, market's on the long side for right now. Doesn't mean it's going to stay there indefinitely.
Right now. Here's the
but this is pretty much
right
what
now,
we'll do.
Recent indicators suggest that growth of economic activity moderated in the first half of the year. Job gains have slowed and unemployment rate has edged up and remains low. Inflation has moved up and remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. Uncertainties about the economic outlook remains elevated.
Right. If the long, again, essentially, if this is false move up, right, and things are going to come down, then below this 50 is where the market gets back to bearish. If the market's going to at least keep some momentum up in the immediate, a lot of times we would look for, you know, an eventual catch-up of the volume-weighted average price and then a move up. So here the market's basically pulling back down. Why? Because why not? Right? It should pull back down to the volume-weighted average price of this breakup and or the 50 SMA. And if the market wants to stay positive, it does. If it wants to go back negative, it will.
Federal funds rate at the end of 2025
so all that really matters is the over-under of $6,603 right now on the SPX and or the price of the SPY here.
This is a significant shift from June, where they only saw 2 cuts. The median projection for real GDP has been lowered. It indicates the Fed sees
pullback targets pretty much economic outlook the initial
than it did 3 months ago, which helps to justify the more accommodative policy stance.
So this is pretty much where support has to hold for the long to stay up.
The unemployment rate at the end of this year has been
if we start to give that up, that's where the market can kind of go back onto the negative side and so on and so forth. So essentially, this is your current support where we just hit,
slightly lower, suggesting increased confidence,
and we will flip back to bearish if the market goes below. Otherwise, anything that we talk about being bearish is just to pull the market back to potential support. So as long as the market's over 659, momentum is still upsided and we're kind of long biased.
All right, guys. So again, we're going to cover this all. But that's basically what we got. So now we are now pivoting to
now when Jay Powell comes out, that might change things around or whatever. But I mean, that's pretty much it. That's how that works.
Expected by most members of the Fed.
So let's bring up good old Johnny boy. What's going on? What are they saying?
Again, 25 basis point rate cut by the Fed. I told you guys this is what we were going to do. Honestly, though, I'm surprised the market's reacting positively to it. Gold is starting to creep back up.
Are you surprised it's acting positively? Well, it's supposed to be positive. Right? We're supposed to be going up over the 50 SMA. So there shouldn't be a surprise as to why the momentum is positive here. That's a no-brainer.
And again, if you want to see the actual plot, most people expect 3 cuts this year.
Pump it. Because why? Because we on the long side right now, dude.
Yeah.
A dur.
And they were pretty.
Oh my gosh. What is happening?
25 basis point cut.
What? I am freaking out right now.
3 rate cuts before this year.
Oh my gosh. Look at pump. I mean,
today.
Oh my gosh. Wow. Who would have thought? Things are going up because we're whoa, crazy. I mean, who would have thought?
Once in October.
No one knew. No one saw it coming. It was impossible.
Favorably to this. Where's Bitcoin at? Bitcoin's starting to creep back up. Again, a lot of people were pushing for 50. I told you guys we wouldn't be cutting 50 here. You gotta trust me sometimes.
Yes, brother. Yes, brother.
Again, if you're we're gonna do something,
I mean, look at this move.
Expected.
Wow. Kim Jong-un and Elon call him Little Rocket Man. They have nothing on my rocket. Look at it blast off. Green candles all the way to Mars. Call me Moon Man.
2:30 p.m. Eastern Standard Time is when the conference starts.
Wait, where's my little teddy bear? Is that still on the screen?
Yeah, this was
I might have took them off. Dang it. Yeah. Oh, but I kind of forgot. Wait, did I forget? No, of course I didn't.
All right, guys, Nasdaq's reacting. Look at the SPY ripping up. Where's the all-time highs on the SPY?
Well, duh.
662,
we're in a buy move, brother.
661.
So this is what we're going to do now, guys. We're pretty much going to anchor to this candle, and we're going to anchor to this candle.
Into the FOMC.
And pretty much this is what's going to be now. As long as the market maintains over that box, then we're still bullish momentum kind of in the immediate on this day.
The FOMC meeting at 2:30.
That's pretty much it. So you just stay long.
Stick around, don't go anywhere.
The risk is that the market could pull all the way down to here, right? And then still trend up, right? So essentially, you're just long the market right now.
Acknowledging that
you should have been long as close as you possibly could have gotten to the price of 6,602 or the price
and again, I'll read this one more time here.
6,509, 6,059 on SPY. Yeah, and essentially we're just going to let Jay Powell come out. If, in fact, the long is false and we're not going to stay trending for forever, then what you see on the screen is what's going to happen. Right? If the long's going to fall apart, you'll see it fall back to this VWAP and then down to here and so on and so forth. If, in fact, Jay Powell comes out and market keeps pumping, it's fantastic.
Follow me on X, at Beginner Trades. At Beginner Trades on X. We're growing.
Yeah, I mean, really all we're going to do now is just kind of watch the volume-weighted average price of this breakout at the 50 SMA.
Guys, remember,
we'll stay long the entire market. Our risk right now is as far as the price of the green box on my screen because I said so, and that's pretty much it.
Markets are kind of underwhelming here, though. They're not really reacting in a big way. A lot of them are going to be sitting on Powell's tone today, and so we'll see what Powell says. We did a poll earlier, 36%.
We're going to pull the market back to the VWAPs, brother. That's what's most likely going to happen.
So
tell your 3,000 people. Tell them, brother.
Moved that much here.
Tell them now before it's too late.
But, like, we're not majorly up.
God!
So...
All right, let's go double check. What are we looking at? I don't even know. Maybe, wait, what's this SPY? SPY should come down to 660.49.
Go through here. NASDAQ pulling back a little bit. Again,
of course it's pulling back, John!
Now showing potentially 3 rate cuts by the end of the year. Again, the Federal Reserve cut overnight interest rate by 25 basis points to 4 and 4.25. Says downside risks to employment have risen. Fed projections now show an additional 50 basis points of cuts by the year end, another 25 of cuts.
All right, so
next 2 years.
Real quick, there's your pullback to said price because pretty much, well, we shied it a little bit on SPX. If you look at SPY, I mean, we hit a low of 660.55. Target there would be 660.48. So we missed by 2 cents. I'm sorry. I'm sorry. The best, I mean, honestly, I think the coolest thing would be to see the markets just keep screaming long to the upside. As much as my heart desires watching everyone chasing this long up to get whacked back to the 50 SMA and then go bearish, that's a what if, right? We'll see. Again, if the long is false, it's just going to go right back to here and then arguably a breakdown like that. That's pretty much it, So that's what I kind of foresee happening. Again, like I said, you're long over the 50, take some profit, and now if things fall apart, it'll look something like that. We should also probably look at the volatility index because, let's bring this up real quick because the VIX is going to be a tall tell sign here. The VIX is, so they've pumped the market up, but the VIX is not broken down. So this is exactly what we talked about today. Even if during the FOMC announcement, God damn it, why is this chart being stupid? There you go. Even if during the FOMC announcement, they launched the market up to start, but the volatility index hasn't broken down, that tells us we still got to be optimistic that the market's going to flip bearish. Because right now, the positive trend on the VIX, again, if this announcement, let me phrase that. If we're meant to stay on the long side of the market, like long's going to blow up here, then we should see the VIX break down. VIX isn't broken down yet. Therefore, we're getting opposing arguments from both the S&P 500 and the volatility index in this current moment. So, essentially, the VIX should be broken down right now with the markets being positive. But since the VIX hasn't broken down, and the market is in fact positive, there's still the opportunity that this long ends up falling apart because the VIX is still positive. So that's kind of something we're paying attention to here. Yeah, so again, we're not full-blown long even with this breakout because the VIX doesn't tell us that we should be full-blown long yet. It actually tells us that currently this is just a short-term long that very well could still get sold into, as we're starting to see. So this is kind of it too. You see how the market's starting to come down below that VWAP on the screen. I'm deleting my old random drawings. This is where it's an over-under. It won't always work perfectly, but that's kind of that zone. So now that this VWAP's getting taken out, it's more likely that it sinks down to that box and that level. So once you take out the volume weighted average price of everyone that chased up the long, you're more likely to stop them out. So it's not a guarantee here because it's one candle, but that's something I do pay attention to is that 660 price, right? That's essentially one of those key zone or key VWAPs in the immediate that essentially once it's given up, that's where it's more likely you see the price go zinc right down. So essentially you got to be a little, oh, what do you know, fucking A, brother, who, oh my, it's so confusing sometimes, like who would have thought? I mean, you just can't, you cannot predict how and where and why things do what they do in the market. It's impossible. You're not allowed to do that. John.
Cheers. We're very flat though. Gold is benefiting a lot from this.
Yeah, Mace, because that's, when Brandon's, I just let Brandon pretty much control the chat, these days.
We had the dot plot, the median projection for the Fed funds rate.
I use YouTube as my outlet for
3 rate cuts for the
having
year.
some fun, if you will.
This is a significant shift from.
I don't want to be screaming at people's ear inside of our chat room where they pay. I mean, all I really try to do in our chat room is just give a couple ideas of where things should go for the day and then pretty much shut up.
That the Fed sees more basis point cuts this year. Median projection for GDP has been lowered. Indicates the Fed sees softer economic outlook than it did 3 months ago.
Obviously,
policy.
Of course there's softer outlook. Of course there's inflation. Of course.
Lower
this is
GDP
all pretty obvious stuff.
During the last dot plot summary of economic analysis update.
What's not so obvious was my best friend telling me he was going to become a transgender woman. That wasn't obvious. That one caught me off guard a bit. But this? I mean, come on.
It's at 2:30. Press conference is at 2:30. The decision's at 2 p.m.
Oh my gosh. The stock chart is doing exactly what the arrows on the screen say they were going to do, which... It's kind of lucky, actually. Sometimes it's almost too clean. Sometimes it's kind of like, why is it that the people that control the stock market?
Yeah, I don't know. A lot of the time we actually react negatively to rate cuts.
I'm just joking. I'm just having fun, boys and girls.
A lot of the time.
All right, so pretty much everyone who got long the market because it was going over the 50 SMA, they're all underwater. They've all been stopped out, and now we're about to flip this puppy, maybe negative? I mean, it's one candle below the 50, but now we're about to flip this puppy bearish and wax them down.
Gold just broke all time.
Just like that. I mean, oh boy.
Spot gold.
All right, I got to stop joking around a little bit and actually kind of think for a second. But so now that we've pretty much done that, well, we kind of need to get more movement below the 50. So let me bring up SPX here. We'll pop it on a 30-minute. So you see how the market is back below the 50 SMA? So that means we are back bearish the market, or we're neutral, but you're not long biased.
Nasdaq's still very sideways here.
So if you wanted to be long, stop. There's no point. Unless you're doing counter longs or whatever the hell. But you're supposed to be bearish now or neutral. Yes, we just talked about being bullish and being long biased. That was in relation to micro day trading momentum up, right? Now we flipped everyone buying that long up bearish, right? So now we're just basically watching things get smoked.
Well, we start trending downward here.
We'll see how bad they get smoked. I don't control how bad they're going to get smoked.
I think most of this showed weak economy.
Which I don't actually control anything.
Right. Most of these reports, the Fed
especially after I got married. After getting married, I controlled nothing.
It all shows weakness in the labor
market.
market.
I don't even control my thoughts anymore.
Lower inflation, but weakness in the labor market is what it shows.
Not that whipped, but you know.
And so that's kind of
everyone does like the touch of a little leather strap on the back every once in a while, you know what I mean? So yeah, you're pretty much just going to be watching things down, watching things bearish until I guess I say otherwise.
In my opinion. And if it's reactionary, we might be too late. We'll see. Yeah, let's take a look at yields.
Why is it going down? I don't understand.
Today are now under 4%.
John told me to be long.
Yields are down.
What is going on?
Well, I think everybody knew we were going to do
Oh,
that.
no,
I mean, listen,
well, that
you
wedding
guys
was
trust
3
what I'm
years
telling
ago,
you,
but yeah.
which
I'm
not
not
always
right.
right. Definitely top
well,
3
not starting,
most
but we'll probably be looking at having some kids here pretty soon.
Slightly wrong.
So, yeah, guys,
But
again,
if you
you're
listen
just
to what I
bearish,
say,
and you're
that's
going to
what you guys
remain
know we're gonna
bearish
do.
this market
People always bet on these wild
for the
outcomes.
foreseeable future, and as long as the market is now below the price of, well, really, just wherever I draw a box, just know that. As long as the price is below here, you can stay bearish.
I guess it depends on the
so,
odds.
if you took some short, you made some money, and you locked some profit, cool, you can just let them ride with stops above here. That's it. Stops over 6,600 or whatever that price is on the SPY over the 50.
Yeah, I mean, real estate prices are going to start potentially reacting to this. I don't know if they're going to react favorably. I've heard 2 different theses in real estate. One of them is that people are waiting to unload their homes because they've been stuck with low interest rates from their homes and they can't sell because then they'll get a higher rate at 6 or 7.
But yeah, this is kind of one of those situations where we do expect a back test to this VWAP zone, whether sooner or later. It's kind of used in a couple ways, in the sense that we stay bearish the momentum as long as the price is below that VWAP. But also, it's many times a back test level and then a re-short level. If the sell move just drains out for forever,
even if those said
then I'll when we get there, we get there. But ultimately, if the market's not going to sell down immediately, then we're looking for a back test to here. Okay.
Yeah, so gold just broke up all-time highs. SPY now breaking down. We're at 258 or 658s. Yeah, it could be the sell the news event. Hey guys, we got 15 minutes until this.
All right, let's see what John's got going on. I'm feeling left out. Gotta figure out what the hell's going on. Oh shit.
SPY gold is at 37.19.
Yeah.
Unless this is wrong. Yeah, it's over 37. There's arbitrage, see?
Arbitraging. Everything.
Elliot, love you here.
I mean, it's easy to spot me on the court, I bet.
But you've always been like that. See me?
Yeah.
Before you hear me. All done.
Thank you.
You're welcome. Not so fast.
Give mama a kiss. Alright, so as you can see, YouTube is still blasting us with ads.
Is the industry
but also that we hit our back test level pretty much. I mean, we shied it by a hair or two there, but I mean that's pretty much good. Let him cook. He's cooking enchiladas.
Yeah, none of these moves are big enough to really influence the direction. I think Powell is going to influence things. So.
Yes. What else we got?
Why didn't gold break highs if they lower their rate?
Low trend GDP growth, and 1995 yield curve gets to about 06 uninverted, and then normalizes back down. And it really just...
That's exactly it, brother. Yes, brother. Justin Weirlin. 3,000 watching now. Lit. Let's check it out.
See, if they do so. If they do cut rates, it is short-term bullish for the market. Does that mean that I'm super bullish? Not necessarily. I want to align price action and what I can already recognize from where we are to what FOMC ends up doing when we open up at 2 o'clock. So a couple outcomes that I'm looking for. Market ends up opening bullish for FOMC, rebalancing back to this 1 hour fair value gap and back to OTE of the entire price leg that we had already created this morning. and then possibly looking to go back lower towards the opposing drawn liquidity because we have not taken external sell side yet. So, or market at FOMC starts to open, we chop, go lower first. Once this is sell side is taken, then I want to see if price action affirms a reversal to possibly take a long. So market opens first. If we end up shooting higher, I want to see if this holds bearish. If this gets ran through and we go higher, there's most likely no trade. Keep in mind too, it's FOMC.
Yes. Oh, fuck. Of course. Ricky, absolutely.
It doesn't let me short. What else is there available to trade? What has good risk to reward? Well, right now it's pretty crazy, right? Because the markets are either oversold or overbought based off of what they just reacted to.
Bro,
Then you have to guess.
market is not oversold. If anything, it's overbought.
And then this is where it makes more sense for me to just stay cash, right?
That's not a bad idea. Staying cash. I like that. That was pretty good.
Just watching, like you said. That's fine. I like that. Not ready for this, and I think that's important for you to be able to be self-aware to know, right? Happy to see.
Oh shit. Oh yeah, by the way, guys,
Right, we got 9 minutes.
hold on, let's turn down Rick. Ricky, settle down, brother. Settle down, Ricky. Can we all just take a second to admire that real quick? Can you guys see what's on this? Oh my gosh, he done did it again.
Early stages
The
of
silly
process.
boy from Louisiana.
Yep. Here we go.
Raised by the homeless man. Bred with the bears. Current sell target. Wow. That's impressive. Weird. How does the market go down into sell target perfectly, then hit a little good old bouncer Magoo? Because
Nasdaq market is beginning to pick up.
hate to say it, because Ricky Gutierrez told me so. What a guy! I mean, wow.
500 shares. Again,
What a guy.
Position small, still right around $30,000.
Wow. Can't wait to make that YouTube short. Might as well do it.
Nasdaq trying to recover. You guys see that? Nasdaq trying to find its support, testing that moving average and that EMA. We'll see if we pop through and begin to rock it, or if it gets rejected and forms a lower high.
Oh man, what a great day! What an absolutely spectacular day it has been.
I had the ads set to low, but I'll take them off fully right now. You guys can feel free to refresh your screen, and there should be no more ads. Okay. Love this price action, though. I agree. It's really cool to see, right? The price action, the downside, the recovery, testing a critical range. We'll see if we break above. Looks like NASDAQ. Looks like it broke above that EMA. Let's see if the price action continues. All right. Watch for a resistance. NASDAQ showing slight signs of a resistance. You see this? Watch for a leg down. Be careful. Again, we're always talking about both sides. Nice push. Here we go. I'm going to buy another 1,000 shares to go long on open. Please do not copy this incredibly risky trade. Okay? Only Miran, Trump's appointee, voted for a half cut. Does that surprise us? No. Right? don't like how slow it's been. Nope. I'm fully closing out. I know I... Oh, whoa. I did not fully close out. I sold 400, not 4,000. Fully closing out now. Why am I fully closing out? I don't like that NASDAQ market's showing signs of a rejection here. So possible lower high, that means another possible leg down. So what that means is I have 5 minutes left. I'm just going to take a small little short on Tesla, 100 shares. I'm going to keep it light, just for fun. Very little trade, possible risk to reward, very small trade here. Okay. Here we go. This is the setup.
Oh, I am back now, people. Sorry, I was gone. Me gone, sorry. Is that now? What's going on here?
What is the difference between Investing Pro and the LPP? Investing Pro is just the software that I use. If you've watched any of my videos, I'm sure you've become familiar with it. And let me make this clear. The link that I share with you guys is an affiliate link. So I do get a small commission.
All right. So currently,
when you guys use my
Tesla is in an uptrend. Doesn't mean it can't have a bearish move, but the breakdown for Tesla would happen below the price of $409.74. So that's where the market could flip bearish. Otherwise, it's still in a macro long for the time being.
Companies that I'm considering investing or trading. With my discount link, you not only get a discount,
Sit me on All right, so remember we talking about how when the market goes below 50 SMA, you can be bearish as long as what? Market stays below the volume weighted average price. Market pops, the volume weighted average price clears, and then that's it. So your shorts are now off, ladies and gentlemen, boys and girls. And now you can be, well, I wouldn't even say be back. I mean, really, you can be back long the market. But I have a feeling this is going to get a little dumb here. But yeah, you could be back long market. Hopefully you entered around 6,603. So now, essentially, you can be back micro long this market over the 50. And your pullbacks are going to be, well, pretty much back to the 50 right now, and or the VWAP. So we're going to do this. So again, you can see how frequently I will repeat process and repeat trade ideas when the market shifts, right? So we were long, bearish, long. And ideally, when the algorithms, when the computers, and those that truly control the market want to, they will keep the long going or they'll keep the short going from this 50 SMA. So far, we've done a false move up, we've done a false breakdown, and now we're trying back long. And whichever one fully wins gets the big trend. That's all it comes down to. So right now, you'd be, well, let me rephrase this. Right now, high-frequency trading computers are buying this up on the long side, and the volume-weighted average price pullback is where I'm drawing. So that's how you'd be positioned. If you want to be long, you can be long. You got to expect pullbacks are as low as 6,603. I'm not doing it on the SPY, but whatever. But yeah, that's pretty much that. Right now, the market internals, everything is pretty much long. Nothing is really selling. So again, if we look at the market and behind the scenes, you want to say, well, what's going on right now? Well, what's going on right now is they're bouncing equities. So obviously, if you look at the price of the stock market, you'll see that everything's kind of bouncing. So again, if you look at the volume of the market, volume increase, S&P issues increase, New York or NASDAQ issues increase, Mag 7 increase, NYSE increase, Dow 100 or NASDAQ 100 increase. So unless the issues in the market put in a lower high and start selling down, it would be long. So that's another thing you can do. Watch the market internals and blah, 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 blah. So real quick, see like we're getting a red. Whoa, come on. See how we're getting a. Oh my gosh, Thinkorswim, would you freaking work? See how we're getting a red candle here. We're getting a red candle here. We're getting a red candle here and here. There's probably a little bit of a pullback on the SPY. Oh, what do you know? There's a red candle there. Durr, obviously. All right, so pretty much what's going to happen here is, again, the market's most likely going to pull back right to where I say it's to, about right there, because, duh, obviously. Why would it not? Doink. There you go. Now, I know that's just one candle, but it's, again, it's obvious. Why would it do that? Because that's the volume-weighted average price of the new long. It's starting over the 50 SMA. If it's legit, then it should hold support above this, etc. And that's the key volume zone to fuck everyone over if it doesn't work. Durr. If Powell tanks the market, I'll be here for you. If he doesn't tank the market, then I'll still be here for you. Is it me on a way? Oh, wow. What do you know? Market falls back to the desired pullback price. Now, let's see. Do they hold it up? If so, great. If not, then the market goes back negative. And so this is probably the biggest pain in the ass or biggest problem you have with the 50 SMA system is that, yes, it's the starting point for new macro swing long or swing short, but there'll be times like an FOMC or just on a regular day where it may screw around at the level for a while before truly working, and then boom, gone. And you might get exhausted, right, trying to pick that move above or below the 50 SMA the whole time, right? So that's kind of the problem with the system is just like anything, when things chop, that's when it gets annoying, right? Everybody wants that easy, fluid, flowing move, right? But anyways, on the micro, you're back to bearish. You're no longer long bias the market. You are back bearish, back bearish. Why? Because the market is below where I say it's below, and that's why you're bearish. Oh my gosh, the candle went down. No shit. Again, you are back on the bear side. So now you have whatever this pop is, a low, a lower high, back below 50 SMA. You're back on the bear side. And remember what I just said. I said, if the market internals do what? Put in lower highs in red candles, then you go lower. So you see how the bounce on all of the markets stopped and then they went red. That's your lower high coming in the market. So yes, you are now back to bearish. And I will repeat the process again. And what is that? That is, you are now bearish the market as long as the market maintains below the prices I say, which is here. Settings, low, high, boom, cool. All right, so now we're back trading bearish in the short term. So as long as the market maintains below the green box I have on the screen, you're bearish. Which then also means counter targets are back to there. On the micro. I kind of got to take a pee, so I think I'm going to go do that real quick. Don't blow up the market while I'm gone. I actually made a small little mistakey in here. Wait, yeah, this candle's supposed to be on that guy. So let's really look at this. Ooh. All right. So again, you're not bullish. You're still bearish. Why? Because market is on the negative side of trend. That's pretty much it. Not a whole lot more to say there. All right, so now let's just review. So let's say you were someone leading into FOMC and you said you were long. So you get long and now you're screwed, and you're still screwed. Now, if you're someone who played it like us, which would be you can be momentum long up, and then below this you stop out and you go bearish. So you'd be long, stop, bearish, stop, bullish, stop, bearish, in. So you've essentially played the momentum above and below, right? And you are not biased any one way or another. You're just directionally favored once you're above or below said specific level. Again, the green box you see me moving, again, that's your counter target right now. So what's that mean? This means market's below 50. If we don't just trend down, break down, and keep going, you reverse back to the green box. Because why? Because that's just what happens. All right, there's your counter micro long target completing, if you will. It could arguably still pop up a little bit more, but just in general, you're back to that counter long zone, because obviously. Again, I don't think I should have to or need to, but again, you are wait, what did I say? Wait, what am I doing? I don't even know what I'm doing anymore sometimes. Just yelling at a computer screen half of my life. Or not talking in front of a computer screen half of my life. Yeah, so again, nothing to do. You're just again, it's just bearish.
But a 0.25 basis cut in inflation, and Trump, and he's got bonds, and Jerome Powell, and his tie is green, but then maybe it's red, and then but Ricky on YouTube, and Connor, and no, it's just bearish, dude. Nothing else to say.
No one cares about your puts. No one cares about your calls, about your 25 basis points. No one cares. Again. The micro is bearish. Because why? Because it's below said level. We're just waiting for the market to actually have follow through from said level. So far, who frickin' knows? I don't know. Does Jay Powell crash the market? Or do we wait another day or so? Kind of like we did last time. Again, have no freaking clue. All I know is you're an idiot if you're trading it long right now.
So here's another thing, guys. Hey guys, come guys.
You see how when you look at these candles, they are red colored. That means markets are going down. So when you're looking at a bunch of red screaming you in the face and you're just loading up longs, yeah, I mean, I've never been one for chopping off my own pecker, but, to each their own. Oh my gosh. It's crazy. Crazy stuff. Market's going down. I mean, wow. No way. Speaking of, let's see what's going on. Oh, yeah, I didn't forget. I mean, I kind of forgot. So for those of you that maybe were tuning in earlier, remember we said if we go into a decent sell move, we're going to take the market down to about the 1 hour trend. So there's your 1 hour trend on SPX. We shied a little bit. Same thing with the SPY. We've pretty much got down to the 1 hour. So as the market trades into the 1 hour, yeah, I mean, as it trades down to the 1 hour, you might see some like scalpable long bounces. So that's something you could try. If you want, you could look for like long scalps, but it's, again, like I said, the macro environment is bearish. Might have a scalpable long down towards the 1 hour support, but again, that's pretty much it. Being bearish at the 30-minute breakdown, your target's the 1 hour, which right now would be 6571, or if you're looking at SPY, it's 65622. We hit a low of 65673. So that's missed by 51 cents. So 51 cents lower would complete the 1 hour sell target of the 30-minute breakdown as discussed like 2 hours ago. Do you think about the day when we sat down smoking while drinking? Again, guys, we're about to complete the sell target down to 1 hour trend. So there's the 1 hour trend hit. Again, it's risky to be a long because, again, you know, FOMC and Powell and blah, 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 blah. I would not really recommend being long. There might be some scalpable potential here, but like that's it. That's all I would do. Just you can hit a little bid, try and scalp it up, make a little money, cool, blah, 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 blah. That's it, right? And why? Because, again, generally when a sell target is met, if it's legit, even for a smidge, you have a little bit of an opposite reaction. That's the best you can hope for. That being said, we are in a sell move, so the best thing to be is just bearish. If you had no trade on bearish, then you had a scalpable long opportunity there, which pretty much has already played out to a degree, so on and so forth. All right. I mean, how crazy, guys? How crazy? Okay, bringing back the VIX. Hey, guys, remember what we said? Even with the market breaking up a little bit, we still have to be optimistic that it's going to fall apart and be bearish. Why? Because the volatility index was still uptrending. So you're just bearish overall. Cheers. How much more foresight analysis can be given for free on YouTube? How much? Yeah, again, guys, it's pretty straight. Hold on, wait, I got a couple levels in there. This one's that one, this one, this one. Do you think of the days when we sat down? Again, your macro bearish below 65939. Your momentum bearish below the price of 65817. You were scalpable long, scalp long, quick long at 65622 on first tag, which already happened again. So, yeah. The next objective for the markets to be bearish is the markets on the SPY have got to give up the 1 hour support on the market. That's it. If markets end up supporting here and bouncing, cool. Again, we might see up there, but ultimately the macro trend is still bearish. The bulls are just hoping the 1 hour trend holds support. If the 1 hour trend fails to hold, then again, that's like a new breach and whatever, blah, blah, blah. This again, it's just down. I mean, I can talk about all the little intricate levels, but which I will, but again, it's just down. It's just down. Why? Why is it down? Because, well, we're in a sell move. And if you look at the market internals say there is no long. There's nothing bullish in the entire stock market right now. I mean, maybe some individual stocks, sure, but from a broad view, every single market is getting absolutely cooker-magooed. So, you're not really long. Do you think about the days when we sat down smoking my living? Yeah, so pretty much you're just bearish. I mean, I don't know how else more to say it. You're a little bear. Just a little guy. Actually, we're probably going to be retracing here pretty soon the previous buy signal. Wait, it should be on a 30-minute bright. All right. Announcing a new price target. New price target. I have no clue if this one's going to work, but we do have the possibility of slinging this bad boy all the way as low as 6,538. What about Dig Guy? What about that one? Let's see. Yeah, I would say worst case scenario drop today would be down to a price of $653. So that'll be my max sell target for the day. It might be a little lower than that, but that would be the most downside I'd look for the time being. If 653 on the market's going to come easy, then that means the 1 hour has to remain down, right? We can't do this whole recover the 1 hour dumb stuff. If so, whatever. But again, that's pretty much it. So you see how the market's instantly bounced back to that 1 hour. Again, very common. You had one candle slip the 1 hour. Now it's a retrace back to the 1 hour, etc. Pretty straightforward. So it just means the 1 hour is no breakdown yet. Which, again, you would never really assume it's breaking down with one candle below. But anyways. But yeah, it would be super cool if it went all the way down to 653. That's probably a more unlikely sell move. But either way. If you're going to be kind of trying to ride the bearish momentum all day, then you just got to stay bearish on the market below. Actually, the zone's a little bigger. So that's your zone to be bearish below, as in like this. If we start to clear house above what I'm drawing, then that's where you'd stop out. All right. So just know that our counter retrace right now is pretty much what I said it is. It's that green box on the screen. So you see how we slipped the 1 hour, now bouncing the 1 hour. Again, that's that 1 hour support coming in. It's actually coming in a little stronger than I thought it would, but either way, that's just the way the market works. There's your retrace to the T1s, T2s of the micro trend. Worst case scenario for everyone selling is that it then pops up into 65850. But really, right now, the only way this trend stays down is the micro needs to hold resistance here. So this is a lot of times a situation where you will see 1 minute micro resistance, and now it's a matter of whether or not a higher low gets held up here. So this is kind of it. This is our micro lower high level back down to here. And if we can break that, good. If not, then maybe we get held up here. So that's what I assume is probably underway, is a little bit of a retrace back down to that previous low. Because, I don't know, because I said so. Alrighty, and I mean it's only one candle, but ultimately you can see here's a red candle off of volume weighted average price from the start of last sell move. Last sell move started where I'm circling. Key volume trend is where we just peaked at. Now it's rolling down, testing previous volume weighted average price off low. Blah 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 blah. Yada 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 yada. And there you go. Sweet, cool, thumbs up. Holy shit! The market moved where I said it would move to. That's crazy. Oh my gosh. No way, guys. It's crazy. Honestly, let's pump 653 downside target right now. Let's just go on YouTube and just start blasting it everywhere, because why not?
I'm gonna give you this designer bag if you can prove to me that you know.
Alright, so I'm giving it legit. I'm saying 653 downside breakdown with, you know, acceptance below the 1 hour. So it's like we're not really pumping anything. We're just telling everyone what should happen with acceptance below the 1 hour. So let's just go FOMC live. Let's just pump that one a couple more times.
How worried are you about one?
We'll just hit him with a couple more 653 bolas. You know what I'm saying, dog? Hey. Whoa. Hello.
Well, I think it would actually be some. But you know, we
I'll subscribe only. Lame. Ain't doing that. Alright, we've done our part in the world. I helped as many people as I could. Do you think about the days where we told everyone on YouTube today? It's 6:53. Spike to 6:53. Okay, ladies and gentlemen, start your engines. 6:53 on the way. Don't tell me, don't say I didn't tell you so. It's just what we do. Is what we do. All right, so we've gotten down to 654.26, so still another $1.26 down would be ideal. Unfortunately for us, though, we do have the counter trend retrace levels all the way back up to here. So the ideally situation is that the market just tanks out and goes down to the target. In the event it doesn't want to do that, then we're going to have to micro retrace all of the micro time frame traders and make their buttholes pucker just a little bit off our counter trend trade level, which is identified by the green box on the screen. So it's just that. Oh no, here comes the micro trend retrace. Well, Pierre, everyone who chased the short down gets their little willy clapped. There you go. See ya. It's too easy sometimes. Too easy, folks. Too easy. Alrighty. Now what's going to happen? Well, basically the market has to hold some resistance here if we're going to go get 653. And if not, then, well, something else. But anyways, there's your micro retrace. And so, again, if the trend is going to kind of remain down in the micro, then this is where the 1 minute micro lower high would have to commence. So now it's just, yeah, it's just, that's our kind of VWAP over under, if you will. Dang it. How lame. That takes off our 653 move for the time being. Well, not really. It's just, now you got to go through the whole rigmarole, reset, jam, if you will, which is just, lame. But again, that's why you have to understand your levels, right? So again, you can have, there's targets as low as 653. And everyone who sold this last leg, their key volume trend is where we said it would pop to. So again, that's the thing, is there's all sorts of targets, and whatever previously happens in the market is what the market then uses going forward. So again, everyone who sold this leg down has a volume level right there. So the main objective when doing lower low, lower high is to bounce the market back to where everyone who just sold would be stopped out. So everyone who just sold this last leg, they're all stopped out. Because most people don't short the tops of legs because A, they don't even know where they're going to be. So they're usually shorting somewhere down that move. So now they've all been stopped out, right? So now the objective would be for this here. So now we're going to anchor to that most recent low, and we're going to look for a retrace into that, essentially. And if that doesn't happen, we're just squeezing off along. So pretty much now we have this low point. And yeah, so now our pullback level is here. And that's if the market goes below here. Because there's a lot of people that were selling that last leg. It all stopped out. So there's a bunch of shorts that are kind of trapped where I'm drawing this box right now. So the only way you pull back below and get this lower box would be doing that. You'd have to be below this to go there. But there's a bunch of shorts that went on this last leg, and now they're all kind of congested right there in the chart. So in order for the markets to go lower in the immediate, blah, 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 then it's going to have to come back down, go below 656, and it can go lower. Otherwise, it just kind of squeezes up. We were so close to getting our 653, boy. I mean, we still needed $1.25, so But that's okay, right? Because we had two targets, right? So where was T1 on the sell? T1 here. That was T1 sell, hourly. And then this would arguably be T2. So we missed T2, got T1, obviously, because T1's easier to get than T2. Blah, 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 blah. Yada, yada, yada. Shimmy, shimmy, shimmy. Yada, yada, yada. You get the point. Where's the market? Market bounced all the way back up to where? The counter trend retrace zone, that if the market stays below, well, it's actually changed now. It's this. If the market maintains below this zone, we can still see the market roll down. Our next target on a break up would be only if the market basically blows out the 5-minute zone, and then your new target will be here. So you have two possible targets at this point, which is going to be, well, let me rephrase that. You have the possibility of a reset to 659.39, but only above. So that's it. There's your two options, essentially. Yeah, I mean, then again, that's why trading's hard, guys. Again, you have to be thinking like 10 steps ahead of everyone else. You got to know where basically everyone who's participating in the market, where their key volumes are, so that if things start going the opposite way, you know where you're going to go, etc. I haven't looked at the VIX in a second, but let's take a little gander. VIX 5-minute chart. Yep, so So again, this is a situation. See how the VIX is coming down right now? The VIX is still positive. So this is a scenario where we might be seeing a VIX 30-minute trade setup where the market is actually pulling the VIX down to its 30-minute trend support at 1565. If the VIX creates a higher low off of 1565, then you're going to see your market essentially get clapped. So SPY will go down with the support of the VIX at its trend of 1550s or so, 1560s. If the swing higher low is developed on the VIX, the market will get cooker magooed. And it's not only that, it's actually down to like the 1 hour too. So essentially, this is what's going on. That zone right there. So let me draw this. So this would be like this or there. All right, wait, we'll bring it back into view. I don't know why it's all weird now. There we go. So that's it right there. So the market is pulling the VIX down. We just hit the 30-minute trend. We have down to the 1 hour trend. So essentially, you're basically letting the VIX come down now into its down targets. We're popping the market long. And only if the VIX can hold support really right around this zone I've just mapped off, then there's opportunity for the markets to roll back down into a sell move, whether that be throughout today and into tomorrow. But the macro, more of the macro side of things is markets still have opportunity to get sold down. It's just all based off the VIX holding support in this 1560 to 1537. If the VIX starts to break these down over the next couple days, then we're just going to see the markets press off into a new long. So again, that's what's going on right now with FOMC. Oh, by the way, you see on the chart what I tell you. Again, pretty straightforward. If you took out the 1 minute and 5 minute VWAP zone, you would reset the market to where? To 65939. There you did it. How did I know that was going to happen? Because I had to get blown off in that exact same trade many of times to realize that when you're on the opposite side of the move like that and you get taken out through that zone, the market and algorithms will force you up to that specific price. Again, the only way you can know how this stuff works is basically by doing it for so long, winning and losing in both arenas, if you will. All right, well, there's that. The question is are you long bias or are you bearish? Well, the macro is still not long. The macro is not long, but the short-term micro was, right? So let's look at this. Now that we've cleaned up the chart, let's just zoom in and see what we're seeing. Where's the bullish-bearish over-under? The bullish-bearish over-under is a 50 SMA. Let's go look at a 1 minute chart. Where's a 50 SMA? Over-under. So I'm going to use a teddy bear for this example. We use a teddy bear. So below this level, you're bearish. What's happened since you've been below? Well, down, down. This is a huge reversal. This is what you call a micro oversold reversal in a macro bearish trend. Back to the bullish bearish over under. We will only flip back macro long once above. Since we're below, it can still be bearish. And also, since the VIX has not fully broken down and gone into a downtrend, markets can still roll. So that's basically what we're waiting on next, is to see over the next day or so, does the VIX break down? If the VIX breaks down, then we'll go back to long bias narrative. If the VIX does not break down, we're pretty much still going to be working into selling the markets. Oh, wait, no. Do you think about the days when we down? So you could say that I take a lot of macro analysis and mix in a lot of short-term micro analysis all into one. So that's how we can have kind of a macro swing approach while looking at all the short-term micro levels and how we'll use the short-term chart to screw over all of the short-term traders, essentially. pretty much the way the market works is you take a leg that goes down and then you end up retracing it a bit and screwing over everyone else. And then a long leg that goes up, you retrace it down and screw everyone that was just long. It's literally a back and forth ping pong game, pretty much. Do you think about the days?
Weekly resistance. The current sell target. There. And there you have it, folks. Current sell target met. Once your sell target is hit, generally you look for support. Why? Because if your sell target is a good sell target, then you would assume that that would be the low of a move. And low of a move would be start of a, at least, long tradable environment. So again,
Okay, ladies and gentlemen, boys and squirrels, how are we doing on this lovely day? Alright, it's probably going to be a good time to end it. Well, maybe not just yet, but, you know, pretty soon. So anyways, you guys, if you want to, in the short term, should be anchored to that low, and you should be anchored to this low, and you should be anchored to this low, and I'll show you where the market is going to belong you. This guy. So essentially, the micro trend is support over that. That's it. So any dips that get pushed into here, that's your micro trend support. But yeah, you know, I probably will end it there for the day. Again, not a whole lot more to say here. It's pretty straightforward. FOMC pretty much amounted to nothing. Right, we didn't have big trends one way or the other. Essentially, all we did was break the market down, sell it down to our T1 and close to our T2 target. The 1 hour trend has found support, so we're doing a 1 hour market long. So again, if I delete all this bullshit off the chart and we just look at the 1 hour chart, that's essentially what we are doing. We are doing a 1 hour long, right? So if you look at the last time, look at the last time the 1 hour chart entered an uptrend. So this would be breaking out, back test 1 hour, trend support test here, long. That's all it is. So we've just literally broken the 30-minute down, went to a 1 hour long, bounced the 1 hour long, and that's just it. Now markets are basically back to trend, almost trend positive, if you will. We're just basically chilling. Now we're just going to get to the next couple days and see what comes. But again, that's pretty much it. That's how you predict markets to some degree. You know, so cheers. Hopefully you guys share the video. Maybe one day we'll get a bunch of people in here that we can actually help, like actually new traders, new investors to the market. But those are generally the accounts that YouTube doesn't want to push to us because they want to make sure they learn bull flags first. Anyways, you guys have a good one, and I will see you sometime. Don't know when. Maybe in a YouTube short, maybe in a live stream. I don't know. We'll see.